Good afternoon. Today we will commence the program Certificate in Foreign Exchange. Warmly welcome all of you for the Institute program. Institute Bankers of Sri Lanka is a statutory body incorporated by Act of Parliament. And our chairman and vice chairman is from the Central Bank of Sri Lanka. Chairman is the Deputy Governor of the Central Bank and Vice Chairman is the Assistant Governor of the Central Bank. And our governing board members consisting of the CEOs of the most of the banks, including Bank of Ceylon, People's Bank, National Savings Bank, Sampath Bank, Ceylon Bank, like that. These governing board members are the one who decided which type of programs IBSL has to be conducted. Our core programs are Intermediate in Applied Banking and Finance and also Diploma in Applied Banking and Finance. In addition to these programs, we are conducting diploma programs and such type of certificate programs. Today, we commence the Certificate in Foreign Exchange program. Let's introduce the resource panel of the program. The half of the program will be done by the resource persons from the Central Bank, including Mr. W.S. Prasanna, Deputy Director, Mrs. D.S. Kamaleen, Senior Assistant Director, Mrs. M.A.M. Chayaratna, Senior Assistant Director, Mrs. T.P. Kapuruge, Senior Assistant Director, and Mr. R.M.S.P. Ratnayak, Assistant Director, Mr. D.L. Lakmal, Assistant Director. In addition to this resource panel from the banking sector, Mr. P. Srikanth is the former head of foreign exchange of the Hatton National Bank, will do the sessions of this program. Today's session will be done by Mrs. Jayaratna. Let's introduce her. She has a 13 years experience in the Central Bank and 8 years experience in the Department of Foreign Exchange. Currently, she is the Senior Assistant Director, Department of Foreign Exchange, Central Bank, and she is a Chartered Accountant, MBA from the PIM, University of Sri Chavadanapura, and she has the Diploma in Compliance. In addition to that, she has the vast experience in training at the CBS Central Bank, Chartered Institute, and also the IBSL. At the end of the program, we'll conduct an examination. It's a 3-hour written paper. You have to come to the IBSL to attend the question paper, and the pass mark of the examination is 51, merit is 65, and the distinction is the 81. And we will award you the certificate with the signatures of our Deputy Governor and the Assistant Governor after you will complete the whole examination and the program. I would like to take this opportunity to thank you and your management who nominated you to participate in this program. And I would like to invite Mrs. Jayaratna to commence the program. Thank you.
Am I audible to everyone? Hello.
Yes, Ms. Jayaratna.
We can hear you.
Good afternoon, and I'm now sharing my screen. Hope going to. Can you see the screen now? Hello. Can you all see the screen?
Yes, can see.
You can see the presentation, right?
Yes.
Okay. Good afternoon, everyone. Hope I'm audible to everyone, and you can see you all can see my presentation slides. In fact, my session would be on the. You all can hear, right?
Yes, ma'am.
Yes. Sure. Okay. Well, this is getting some disturbances. Anyway, so this is like her newly started certificate program, and I hope you all can benefited from this session today I'm going to conduct. So let me talk about with you all about current international transactions. This is actually subcategory of the lectures what we are going to do throughout this the rest of the sessions as well. But I'll do some this is my outline and introduction. I'll be introducing some fundamental concepts, and then I'll talk about current transactions. So before moving to the current transactions, now you all are joined to the certificate program on foreign exchange regulations and all. So what are these foreign exchange regulations? Actually, the introductory sessions, I think due to some unavoidable reason, it is postponed to next weekend. But in that case, in that session, you will be covering the entire the sessions or these relevant sections under the Foreign Exchange Act. But let me briefly talk about Foreign Exchange Act, which is the Act number 12 of 2017, which was introduced in the late November 2017. And before that, if you may have, some of you may have remembered, there was an act called Exchange Control Act, and now this act is not there anymore. It is repealed from the control regime. Now we have moved into a more liberalized, more managing act. It's called Foreign Exchange Act, and this was introduced on 17th November 2017, mainly with the objectives of promotion and regulation of foreign exchange of the country. So this act and the regulations thereof have been evolved from the more restricted regulations to gradually liberalize foreign exchange transactions. And more importantly, when I'm saying more managing and liberalized foreign exchange act, now you all have, it's not the repealed Exchange Control Act. In the era, or in the economic circumstances like these days, we actually do a important role when it comes to managing inflows and outflows of the country, outflows of foreign exchange of the country, as well as support into the foreign exchange reserve level of the country. That is importantly, that's why that sort of an important role is played under the Foreign Exchange Act at the moment when it comes to managing inflows and outflows of the country. So this is some brief introduction on the Foreign Exchange Act, where we talk about largely on the promotion and regulation of the foreign exchange of the country. So keep in mind that the exchange, actually some bankers, even some public always call to Exchange Control Department or refer to Exchange Control Act. Now the act is not there. So it's all about Foreign Exchange Act and the Department of Foreign Exchange. So when if I'm going to move on some of the fundamental concepts that comes under this act, in fact, the applicability of the Foreign Exchange Act largely depends on the two areas. First thing is the residential status of the persons, and the second one is the nature of the intended transaction. These two concepts are important when it comes to application of the Foreign Exchange Act. And you'll be you'll be listening to many regulations and directions in the coming sessions as well. So all these regulations, the directions and all largely depend on these key areas. One thing is the residential status of the persons or the parties who are involved in the transactions or the foreign exchange transactions. And the second thing is the nature of the intended transaction. So first category, under the first category, the residential status of the persons, that is important because we are not talking about the person's citizenship or their nationality, but we are talking about the residential status. That is, whether a person, I think most of you all are joining from banks. So that we talk about here, whether such person or your customer is a person resident in Sri Lanka or a person resident outside Sri Lanka. That is the main categorization when it comes to identifying these parties who are involved in the foreign exchange transactions. And there's a separate order. In fact, under the Foreign Exchange Act, we introduce certain regulations or the guidelines regarding transactions by way of regulations. There may be regulations, there may be orders, there may be directions. Likewise, the general permissions are largely introduced by way of regulations, directions, and orders. So when it comes to the identifying particular person's status or the residential status as a resident or a non-resident, that there's a particular order issued under Section 31 of the Foreign Exchange Act. In fact, you'll be covering, don't worry, got to these sections and all. I may be referring to certain sections under the Foreign Exchange Act, but sure, you can cover these sections in the next lecture, and you can talk about these sessions in detail. But when it comes to residential status, simply just remember there's an order issued under Section 31 of the Foreign Exchange Act, and there's a gazette notification which had been issued to the public, and there we categorize certain categories of persons as to resident, but largely in the when identifying residential status of a person, it depends on the time period which that person lives in Sri Lanka. So see, if the person resides in Sri Lanka for 183 days or more in the preceding 12-month period, that one is we called as a resident in Sri Lanka for the purposes of the foreign exchange. Yes, bankers, you may have familiar with the segregation of persons under the Inland Revenue Act and all. Like one, even in the Inland Revenue Act, you have the time bar period for identifying the residential status of the persons. Like one, when it comes to Foreign Exchange Act applications, a person is treated as a resident when he stays in Sri Lanka for more than 183 days or more in the preceding 12 months period. And there are certain other categories of persons which we have identified as resident for the purposes of the foreign exchange. Like said, for students who have gone abroad for studies under student visas, we do treat them as resident. Likewise, there are certain categories of persons. So that particular order talks about this residential status, and that is the main application when it comes to residential status of the person, and it is an order issued under Section 31 of Foreign Exchange Act. So definitely this is not, not the citizenship, but not the nationality, but it's about residential status. And the second most important thing is the nature of the intended transaction. Nature of the intended transactions means the nature of the transaction, nature of the foreign exchange transactions. And in fact, you may feel this as important because for which we have basically categorized as to capital transactions and current transactions, or rather non-capital transactions. This is again important because then only you can, as bankers or maybe as public, you can apply these regulations, directions, and orders and all, and facilitate the relevant transactions of the country. So if you are not clearly identified or segregate the particular foreign exchange transactions as to current or non-capital transactions or capital transactions, then it will be somewhat difficult. But correct identification would matters when it comes to identification of the Foreign Exchange Act. So this is the basic slide when it comes to applicability of Foreign Exchange Act. I hope so far I'm clear to you all when identifying these transaction types. And next, this is an important slide, if I'm to say, because In fact, I have told in this previous slide, the nature of the transaction or the intended transactions is important. So when it comes to transactions, I hope you all have an idea, like it is in fact different from the transfers. But let's say for a transfer, there is an only one-way flow. But when it comes to transactions, there are two persons. Let's get the more layman definition for these transactions. Transactions are involved two parties, and there is an exchange, right? So that's the most simple meaning for when it comes to transactions. And in fact, under this concept, we divide these transactions broadly into local transactions as well as to international transactions. So what are these local transactions? That is the first category, first categorization of these transactions. So what are these local transactions? Local transactions are the transactions that you and me carry out within the country. And by the name itself, these transactions should be carried out in Sri Lanka rupees. That is the transactions that happens between persons residing in Sri Lanka or between persons in Sri Lanka. And these transactions definitely happen in Sri Lanka rupees unless otherwise permitted in another currency. So those are like in general terms, local transactions. But when it comes to international transactions, the international transactions are the transactions that is happening between the cross-border level. That is, persons within the country as well as persons outside the country. At cross-border level transactions, and definitionally, these transactions are therefore being recognized as cross-border transactions. It should be carried out in foreign currency. So when for the identification or ease of identification of these transactions, I can say it is the territorial basis what we recognize when it comes to the whether a transaction is a local transaction or an international transaction. Transactions within the country, those are local transactions, and transactions that happens within the persons who are in Sri Lanka and persons outside Sri Lanka, or the residents outside Sri Lanka, those are the international transactions. So under the international transactions, we segregate these international transactions. In fact, for international transactions, I said that like earlier, for local transactions, you have to you have to conduct these transactions in Sri Lanka rupees. But for when it comes to international transactions, those are happen in foreign currency, and you have to convert Sri Lanka rupees into foreign currency or vice versa when it comes to international transactions. So international transactions under the second level of classifications, we can divide broadly as to current and capital transactions, as I told earlier. So current transactions is actually my area today, and we'll be talking capital transactions later. And no, in general terms, what we understand under as to current transactions. Some people may have like remember these transactions as to by examples like say import of goods is a current transactions and all. But let me talk about it like this. When it comes to current transactions, there is an inflow as well as an outflow. Likewise, there is a two-way flow. So that's let's say you'll be like one of your customers, or maybe you are going to import some let's say some goods from overseas, or a foreign party or foreign person who's living outside the country, and that goods will be coming to the country, and in return bank has to pay, or the person has to pay some money, let's say $5,000 or somewhat outside the country. So in return, he gets some machinery or some goods, and again, there will be an outflow of say, foreign currency. So what would be this transaction? And there's an inflow of goods or machinery at the particular juncture, and there's an outflow of foreign currency. So when it comes to the balance of payment or the country level, at that instance, earlier the country has foreign currency, 5,000, let's say US dollar 5,000, but now the country doesn't have foreign currency, but the country has machinery and machinery worth on the same value. So earlier the asset formation was a currency, but now it's the different formation of asset, but on the same the value did not change. So when it comes to current transactions, what I can tell you is the balance of payment is balanced, like there is an outflow and in return there is an equivalent inflow. And likewise this macro picture is balanced. So there is a two-way flow when it comes to identifying a current transaction. But then again, let us take another example like this. There is a foreigner who wants to do an investment in Sri Lanka, and that foreigner brings some money to the country, let's say $100 million. And in that case, that foreigner brings some money and he's going to acquire some shares of a resident company here. And that case, there is an inflow of foreign currency, 100 million. And the particular company will record this as a share issued to a non-resident. But at that instance, there won't be any outflow. Only one-way flow is happened at that particular instance because there is an inflow of foreign currency and that person is acquiring some shares, but there won't be any outflow. But when at a later stage, because of the ownership of shares to this particular non-resident, he entitles for dividends, some profit and all. So that dividend repayment becomes a current transaction because of the ownership to the shares by a non-resident, he is entitled to a dividend payment, and there is his ownership and again an outflow of dividend. So that dividend payment can be recognized as a current transaction. But initial stage, that foreigner bringing funds to the country and acquiring some shares, there is only an inflow, and that is a capital transaction because it's there is a one-way flow. This is some I actually just explain you all simple identification for categorizing or demarcating what a particular transaction is a current transaction or a capital transaction, because when it comes to current transaction, you may have heard that Sri Lanka, actually in the coming slides also I will talk about this, but simply I can tell for current transactions, I'm talking about the bankers or authorized dealer. We talk under the Foreign Exchange Act, these licensed banks in Sri Lanka as authorized dealers who are like permitted to deal in foreign exchange, that is to buy, sell and exchange foreign exchange. So we term these banks as authorized dealers for the Foreign Exchange Act purpose. So when it comes to current transactions, authorized dealers or the banks are freely permitted to release foreign exchange because they are simply current transactions. But when it comes to capital transactions, there may be there are certain general permissions, as well as there may be instances where you have to refer to the Department of Foreign Exchange or seeking special approval and all. Actually, here also I can say that this simply because you'll be covering the introductory lesson in the session in the next week. I can tell you that under the Foreign Exchange Act, we may often talk about like general permissions and special permissions likewise, because I told you earlier that there are regulations and orders and directions likewise where we communicate certain transactions as to permitted transactions under the Foreign Exchange Act. So those are for the general permissions which we communicated to the public as general permissions by way of regulation, directions and orders. And there are case-by-case basis or the case-specific basis, or likewise there may be special permissions. So likewise general permission and special permissions are there when it comes to these foreign exchange regulations. And again, current transactions, these are largely freely permitted, and of course general permissions have been granted to the authorized dealers to deal and to release foreign exchange for current transactions. And unlike for capital transactions, because Sri Lanka, I'm like not a country where our capital account is not fully liberalized. You may have heard about like balance of payment. We talk about current account, capital account, and all. Under that, unlike for current account, but for capital account, Sri Lanka capital account is not fully open or not freely capital account is not fully open. So in that case, there are controls or the capital controls when it comes to capital transactions. But for current transactions, since actually 1994, where the Sri Lanka as a country has adopted IMF articles. There are international monetary fund articles are there, and with the adoption of that IMF articles, current account is fully convertible or fully liberalized. In that case, for transactions that, as I told you earlier, those are freely permitted through the bankers, yes, bankers can release foreign exchange for such purposes. So I only took a simple example where someone is importing machinery, and again there is an outflow of the same word. Likewise, but my advice is you all to, I'm like, even you may be practicing bankers, don't remember the difference between transactions as to current capital simply on the examples, but just have a idea on your mind how to recognize in this difference or the demarcating this difference, because then only you can apply the correct regulation or the direction, as I told you earlier. Like there may be the instances where under the Foreign Exchange Act we have allowed or granted general permissions, then you can freely look into that transaction and facilitate the customers. On the other hand, there may be transactions to which general permission is not there. So likewise, this the demarcation of the segregation between current and capital transaction is important. Even in the today world, like not simply like importing and exporting and all, but there may be, even for trade transactions, there may be very complicated transactions. The persons may be having very complicated foreign exchange transactions. So applications of this current and capital is important when you are to identify or when you are to apply the correct regulations thereafter. So hope I'm like so far clear to you all, because we talk about transactions, and definitely it's not transfers, where we under the transfers just talk about like they are the only one-way flow. But when it comes to transactions, there is always two-way flow, and these transactions broadly we divide into local transactions and to international transactions. And these international transactions are definitely carried out in foreign currency between persons residing in Sri Lanka and outside Sri Lanka at the cross-border level. So again, these international transactions largely divided into current and capital transactions at the second level of classification. And at the third level of classifications, I can say that current transactions can be divided into 4 other areas, like foreign trade, services, banking and freight, interest on loan, amortization on loans, family living expenses. Like that, there are the subcategories of transactions when it comes to current transactions. Then again, import, export, entrepreneur sales, services. Like I'll be talking about these areas in the coming slides. So basically, I hope you all have got some idea on if I'm to summarize so far up to now, like if I talk about Foreign Exchange Act, it's not the Repealed Exchange Control Act, but it's the Foreign Exchange Act that we talk about promotion and regulation of the foreign exchange of the country. And next I talk about some of the fundamental concepts, where I talked about the residential status that matters, not the nationality, not the citizenship, but the residential status, and then the segregation of transactions as to current and capital transactions. So this is important when it comes to apply these foreign exchange regulations. So with that summary, let me move into the other areas. Excuse me, Mrs. Buddhika, are we to do, I mean, can we do a poll? Mrs. Buddhika? Okay. Do you all have any questions up to now? We want me to clarify further on. You can ask any questions or drop a message. Do you all have any questions? Okay, if you all are, so far okay or don't have any questions, let me have a question for you. I don't know whether we can go for a poll on this. Mrs. Buddhika, can we do a poll on this? Yes, thank you. Someone has said that all clear. So I don't know whether we can go for a poll, but let me have a question, and if you can message the answer for this one, I will be like happy to see your answer. So this is the question for you all. Like there's a company or let's say one of your customers wants to import a machinery from USA worth USD 1.6 million, which will be recorded as fixed asset in his financials. So how do you all recognize this transaction? How do you all facilitate this outward remittance? If I'm to say it's somewhat high amount in and the value is bit high amount, and this will be recorded as a fixed asset in the financial statements of the company. So, and it's a machinery that is imported from USA. Now the particular customer has reached you all, and the banker wanted to remit funds outside Sri Lanka. Do you recognize this as a capital transaction, so bank cannot release funds? And our second option is, this is a current transaction. Yes, bank can release funds. And third option is, this is a current transaction, but bank may seek a special permission due to the high value. And the last option is, this is a capital transaction, but bank can release funds. So I would like to see your answers for these questions. How do you all recognize this transaction under this categorization? Like I talk about some international transactions where we recognize transactions as to current and capital. So there's an example. There are some customers going to import a fixed asset for his company, and its amount is USD 1.6 million. What is the most appropriate, you think, answer for this question? Can I see the answers? Or if you all can tell me. Only few, yes, answers are coming. Can everyone like give a try? Yes, I think since most of you all have responded, yes, some have, majority have said answer B, and some few have mentioned it as answer C. Yes, let's take the option as answer C. Like, This is a current transaction, but bank may seek a special permission due to the high value. That's what in this case, yes, amount is bit considerable. Amount is USD 1.6 million, and but as I told you earlier, for current transactions, banks have the liberty of releasing funds, right? And that release of foreign exchange funds depend on the first. You have to establish the bona fide, or you have to establish whether the transaction is a genuine transaction and whether this transaction is a current transaction. So you can facilitate, yes, but it's, we here talk about the transaction type. We are not bothered about the amount. It may be a lesser amount, it may be a higher amount. As long as it's a current transaction, yes, bankers can definitely facilitate these transactions. So in some instances, some of you may have get this wrong, because this is a machinery, and that will be recorded as a fixed asset or the non-current assets under the financials of this particular company. So some may have think this as a capital nature. Some actually often we getting calls and all inquiries from the bankers. Yes, we are saying that this may be not a not a current transactions. Then that's why we referred for your special approval and all. But as I told you earlier, for current transactions, you don't need any special approval. Whether it's the amount may be higher or lower, irrespective of the value, and that may be recorded by the company as its fixed asset, because we are not talking about the individual cases. We are talking about at the country's macro picture, at the balance of payment level. As I told earlier, now even this time to take this example, this may be this is a fixed asset for the particular company. It's a capital asset for the company, but for the country perspective, it's like this. Their earlier country had the USD 1.6 million cash or the foreign currency. Now then in return, now the country has the same worth machinery. So the balance of payment is balanced when it comes to this particular transaction. So this is a current transaction, and irrespective that is a capital asset for the company or the amount is high, this is a current in nature transaction under the foreign exchange regulation. So definitely banker can release funds upon establishing bona fide of the transactions. You don't need to refer to the central bank or the foreign exchange department for when it comes to releasing funds for this similar transactions. Okay, and so since you all have answered correctly on the first questions, let me try the question number 2 with you all. Here the question is like this: 10 number of bank staff attending a foreign seminar and wants to pay seminar fees of GBP 10,000 each. What is this transaction for the purposes of the Foreign Exchange Act application? So they are your bank staff, 10 number, and that your staff is attending a foreign seminar and want to pay the fees GBP 10,000 each for one person, GBP 10,000, and you'll be paying this for organizing some seminar in, let's say, India or USA. So how you all recognize this particular transaction under the Foreign Exchange Act? Can I see some answers like in the earlier case? Is this question that much confusing for you all? I mean, only few are responding. Okay, let's see. Some have told this as a capital transaction. One has responded this as answer B, and it's a capital transactions, and few have answered it as answer C. Let us see this way. Earlier, actually, I took an example regard to goods, right? The machinery import. Let's say here, actually, seminar fees, that is the underlying transaction. So you have to first clear about what is the underlying transaction. The underlying transaction here is it's a foreign seminar fee, right? Seminar fees that is to be paid to a foreign party. So the seminar fees would be the underlying transaction. Yes, GBP 10,000 into 10, maybe that is the value of the transaction. So here the staff of your bank going to obtain some going to get some knowledge from that seminar. Let's say that benefit is there. In return, you will be paying some fee. So there is, in fact, as I told earlier, two-way flow. Your staff is going to gain some knowledge or by attending to that seminar. In return, there will be a fee outflow of that outflow of foreign currency for such purpose. So there is a two-way flow, and this is a current transactions as there is a two-way flow, and this is not a good import or good export, but it's a service in nature, like intangible. You don't know whether your staff got the correct knowledge or not, but it's intangible in nature. So it's intangible nature, service transaction. So, and definitely a current transaction, but not a capital transaction. Not other transaction. Some may think like our bank is going to get this benefits. It cannot treat as a current or capital transaction, but other transaction, no. When it comes to cross-border transactions, cross-border international transactions are only two types, but that is current or the capital. It should be either current or it should be capital. So when it comes to this is a service nature, trade in service. It's a current transaction, not a capital transaction. So most appropriate answer would be answer C. This is a trade in service and falls under current transactions. And next question, don't fall asleep. Please answer to this one. This is, I can tell you, let's say one of your customers has won a lottery from overseas and wanted to remit a small fee in foreign currency outside Sri Lanka in order to release such winning proceeds. What is your course of action in this case? One of your customers, let's say your key customers coming into the bank saying that I have won this much of funds. So some foreigner told me that I have won a lottery from overseas and this is a huge sum of money. And in order to release or get these funds out, I want to send him a small fee, some charge, and to his personal account, let's say $5 or $10 or somewhat. It's very small amount, in order to get these winnings proceeds to the country. So what is your course of action? Let's say this person has reached your branch or the bank and you wanted to facilitate this transaction. How do you all recognize this? This is a current transaction. B, this is a current transaction, can facilitate remittance of fees as it's a small amount, anticipating huge sum of winning proceeds. This is not a current, not a capital transaction, decline it. This is answer D. This is and other transactions, and refer the matter seeking IBSL special permission. So I actually I'd like to see some answers for this. Please, others also respond. Okay. Hope y'all are trying to answer the questions, but since few of you all have responded, let me talk about it this way. Few of you all have mentioned this as answer D. Some have mentioned this as answer under the answer A, and only one I saw as answer C. Right? So, what is this transaction? Is it a current transaction? I told for current transactions, if I'm there for in the service example or goods import or whatever, if you are getting some benefits or the country gets some benefits and in return equivalent outflow happens, right? There may be a different formation of assets, but inflow and there will be an outflow of the same worth. So is there any inflow in this particular case? You will be informing by this particular customer, there are going to be some winning proceeds that is to be coming in the future. But at the particular moment, there won't be any inflow. So, and in anticipating that inflow, then only the fee is to be remitted. So this is not a transaction. I told you transaction in this earlier slide also transaction. And we are talking about always transaction. It's not about transfers. Like for transfers, there will be only one-way flow. But for transactions, there is a two-way flow. In this case, there will be an only outflow. There won't be the winning proceeds. We are not sure about the winning proceeds will be coming. Will be getting by this particular person. So this is not a current transaction. Then again, this is not a current transaction, and since this is you may think like this is a small amount. Yes, you can. It's no harm of facilitating this. No, this is not a current transaction for which you have a general permissions. It's not a current transaction. So even though value is small, this is not a current transaction. Therefore, you cannot facilitate in that way. And please don't refer these similar transactions or the similar matters to us seeking special permission. This is not a type of, this is, we can say what we can do. You all may know this as scams, right? People often get these kind of calls or the email saying that so-and-so, is willing to give some funds to the country and that you have to send money back. So our answer is to them, tell them, deduct the relevant fees and then send funds to the country, because this is not a valid transaction to which the general permission is granted under the Foreign Exchange Act. This is not a current transaction. This is not a capital transaction, or even this is not an other transaction. This is definitely a scam, that as this is only a one-way transfer. This is not a transaction. These kind of transfers should not entertain, as well as you all have the responsibility to you educate the public or your customers, don't get into this type of scams or the misleading transfers. This is not a current or not a capital transaction, so you have the right to decline this as a scam. Okay. Hope so far so good. And as I told you, since this is a certificate program, I think you can read these materials leisurely. And from trade and financial transactions within the country should be carried out in local currency, that is Sri Lanka rupees, unless otherwise permitted in a foreign currency for a specific reasons. So you may be familiar with that, there are certain other directions where we have introduced certain foreign currency accounts to persons resident in Sri Lanka. So under that foreign currency accounts, in certain transactions, we have allowed to carry out in foreign currency between foreign currency account holders. So if we haven't permitted likewise, in terms of the Monetary Law Act, transactions between persons in Sri Lanka, resident in Sri Lanka, like you and me, all this trade and financial should be carried out in Sri Lanka rupees. That is the Monetary Law Act provision, section 4 and 52 talk about this, as the legal tender in Sri Lanka is Sri Lanka rupees, and we are not talking about dollarized countries. It's Sri Lanka rupees that the local transaction should be carried out between local persons. That should be encouraged or entertained at all the time. So as I told you, this is the simply this diagram just for simplification person, like party A is a resident, party B is a non-resident, and there's a cash or the financial outflow as well as in return goods or services flow. That is the simple definition for current transactions. But when it comes to capital transactions, only one way flow at that particular juncture, and there may be a asset or liability, like say person wanted, a corporate wants to borrow from overseas, right? In that case, for foreign borrowing, that foreign borrowing, you'll be getting some inflows to the country, and there be the company will record this under their liabilities. But at that instant, there won't be any outflow, or there won't be any benefited outflow from the country. So that sort of transactions are recognized as capital transactions. Even when it comes to for the interest components that is relevant to this particular part, that is actually current transactions. How it is a current transaction? Because of your liability to such foreign borrowings, because of that liability, then only there is an outflow of interest. Likewise, that instance, there is a two-way flow, and that interest payments, interest income can be recognized as a current transactions. But then again, foreign borrowings can be recognized as a capital transaction, and we are talking about at the particular instance, not the later on. So likewise, this is a simpler simplification it can give you all to identify what these current and capital transactions are. Then again, this is kind of a textbook definition for you all to remember. The current is foreign exchange transactions relating to goods and services in trade and non-capital in nature. But bear in your mind that simply there should be something inflow, and then again there should be something outflow. There is neither a new asset or a new liabilities created when it comes to current transactions. There may be a different formation of assets or liabilities, but different formation of assets, but there won't be any addition or outflow from the country when it comes to current transaction. There's nothing new addition or liability created when it comes to current transactions, unlike for capital transactions. Definitely for capital transaction, there will be an addition or there will be a liability created for capital transactions, which is not in the case of current transaction. For capital transactions, simply foreign exchange transactions related to acquisition, sale of real and or financial assets. So these are some of the examples: import and export of goods, services, payments for expatriate, investment income, as I told you, like dividend, interest, rent, profits, and living expenses. These are some of the examples for current transactions. In fact, this current capital is not the difference where we learn under the accounting standards that's what this is. We are talking about foreign exchange regulations and applications. We are talking about at the broader BOP level, macro picture of the country. So current transaction, you have this definition. And for current transactions, yes, I told you, like, you can go to at any time, you can refer to DFE website, or you all can see this is the Department of Foreign Exchange website, and under the downloads you can get all these directions, acts and orders here, a lot of regulations. You can see a lot of regulations, and even in this after the COVID period also we have issued several regulations, largely for controlling the capital outflows of the country. So you can see all these regulations, orders, directions, and so under the department website and downloads. Just have your time and familiar with all these directions, because for current transaction, that is the direction number 2 of 21. It's like this, I think. Yes, this is the for current transactions. This is the direction talk about current transactions, where the general permission is granted to the authorized dealers or the banks. So even in these directions, we have whole set of transactions have been specified here, a list of transactions. But our message to you all is don't limit to, when it comes to application of current transactions, don't limit to only to this particular direction, because this is only a guideline, right? And there may be transaction if they are different nature, but just clear on the underlying transaction and facilitate as long as such transactions are current in nature, because this is only a guideline, not an all-inclusive list, but it's a kind of a guideline where you can get an idea about how this trade or the business, other related transactions are likewise. So this is only a guideline, and you can refer to this direction number 2 of 21 issued, the revised direction actually was issued on 18th March 2021. This is there in the Department of Foreign Exchange website. So, and the Foreign Exchange Act, these sections will be covered extensively in the, by next week. So, this is the Foreign Exchange Act number 12 of 27. This act also there in the DFE website. Just download and have a look. So, under this provisions of this act only, we issue directions or regulations and orders. So, for current transactions, it is the section 6 of the Foreign Exchange Act that we talk about current transactions. And then again, it has a broader definition in terms of the IMF articles. This definition is coming from the IMF articles. So that IMF Article 8, so that definition is there in the Act itself when it comes to current transactions. Yes, definitely. Under as a schedule, you can see Article 30 of IMF, Article 8. This is the definition in the IMF articles on agreement for current transaction. That definition, under this basis, we have categorized the transactions under this particular direction. So, Section 6 and Section 33 of the Foreign Exchange Act talks about current transactions. I think I earlier explained to you all, so this is again some textbook definition. An international transaction necessitating a transfer of foreign exchange into or from Sri Lanka, that is payments which are not for the purpose of transferring capital assets, and includes without limitation following, that is payments connection with foreign trade, other current businesses including services, payments as to interest on loans, and investment income, and the payments of moderate amounts of loans, or and so less moderate remittances of family living expenses. So this is the Article 30 of the articles of the IMF, Section 6 of the article FE Foreign Exchange Act talk about this current transactions largely. And I think I have told you earlier also, with the adoption of IMF Article 8 in 1994, these transactions, current account is fully open in Sri Lanka. So that current transactions are fully liberalized, and therefore release of foreign exchange by the bankers without any restriction is permitted. So AD should assess, however, AD should, the ADs in the, here ADs means authorized dealers. Authorized dealers, that is licensed bank, should assess and satisfy the genuineness of this requested transaction. As long as you can verify this as you have adequate documentary evidence to verify some such transactions as to current in nature. Yes, sure, there won't be any, there shouldn't be any special permission requirement. The general permission is there, and this direction, revised direction, is effective from 20th March 2021. As I told you, it can be downloaded under the from DFE website. So, and then again, the application of the current transaction direction under this foreign exchange that depend on the persons in or resident in Sri Lanka. Here, actually, the person includes both the legal person, that's corporates and all, as well as natural person. If it is a natural person, then include individual as well as the immediate family member. And immediate family member for the purposes of the current transactions include only a spouse, children, and parents. In some instances, like say group of companies wanted to do transactions, the holding company wanted to do a transaction for another sister company out of their particular account, but that cannot be facilitated because we are talking about legal personnel. Here, that particular holding company and its subsidiary or different legal entities. So you have to treat them as two legal persons. But for natural purpose, for individuals, immediate family members like spouse, children, and parents, not the grandparents, spouse, children, and parents, can be recognized as immediate family members, and you can facilitate such requests when it comes to individuals as well as legal persons. Going forward, you can understand that in some instances, under the certain capital transactions, we talk about immediate family members, including grandparents. But for the current transactions, individuals include immediate family members, that is spouse, children, and parents only, not the grandparents. So the persons in or resident in Sri Lanka applies for legal persons as well as for natural purpose persons who are individual. That is the broad application of these directions. So this is one of the, now I like to go into the detail of these current transactions. So it's about merchandise, goods export, and even if you may have like about this, I'll talk about that regulation later. So when it comes to goods export, simply it's like let's say one of the customers is exporting or sending some goods outside the country, and in return getting some funds or the foreign currency earnings from abroad for such. So if it is an export, then receipts are freely permitted. However, there may be trade policy of the government. Under this presentation, I'm always talking about foreign exchange act. Even in the previous case, I told you like under the Foreign Exchange Act, the release of foreign exchange is freely permitted. But there may be the trade policy or the tax policy, like trade policy, government policy with regard to these transactions. But from the foreign exchange regulation perspective, these transactions are fully liberalized, subject to the trade policy of the government. So you have to, as the bankers, you have to bear in mind, right? Not only even if the transactions are liberalized or releasing foreign exchange are permitted for this type of current transaction, there is a government policy or the trade policy of the government. In that instance, certain transactions may be limited. So likewise, you have to parallelly look for all the regulations when it comes to facilitating these similar transactions. So as I told you, receipts are freely permitted, and these express proceeds you can be credited either to a Sri Lanka rupee account or to a business foreign currency account or to an offshore banking unit account. And then again, the export related commissions, there may be instances where the customers have secured overseas buyers, and in that case from another person. So in that case, commissions of the claims has to be made. So these commissions and claims are freely permitted when it comes to export orders. However, export proceeds should be brought to the repatriated to the country, and first then only these remittances of commissions and claims are permitted. So that is the general policy for export of goods. And then as I'm talking about a previous service example. Trading services is another subcategory. So under this trading services income receipts through banking channel and can be credited to any Sri Lanka rupee account or to a business foreign currency account or to a personal foreign currency account. So don't be like, if you don't understand this business foreign currency account or the personal foreign currency account, that's okay. We'll be talking about these foreign currency accounts or the types of foreign currency accounts in the coming lectures, because under the Foreign Exchange Act, we're talking broadly about current and capital transactions, as well as it's a set of foreign currency accounts which we have introduced for certain categories of persons, which we treat them as eligible persons. So for business foreign currency accounts, that is largely for business purpose, and there are certain eligible persons, mainly for residents. Likewise, for personal foreign currency account, there may be residents as well as non-resident, but this by the meaning itself, personal in the sense, personal foreign currency accounts can be permitted by individuals. So business foreign currency account, for business foreign currency account, there will be individuals as well as corporates, but for personal foreign currency accounts, it's only for individuals. So when it comes to service income, you can credit to either to a rupee account or BFC, PFC of this service earner or service exporter. And there are certain permitted credits and permitted debits for each and every of these accounts. you can cover in the rest of the session. So when it comes to service payments, like for service income, service payments are also freely permitted, but subject to the other statutory requirement. As I told you earlier, there may be, and these are for the liberalization is only from the Foreign Exchange Act perspective, but there are trade policy or the other statutory requirements, like you have to obtain for certain service payment tax clearance certificate from the Inner Revenue Department when facilitating certain outward remittances in respect of services. So subject to that, broadly this service income and service payments at the cross-border level or the international level are recognized as current transactions and therefore freely permitted. Yeah, then again, these are some of the examples like transportation, insurance, financial, trade-related, personal culture, repair services, subscriptions. And as I told you, this indicative list is there in this particular direction. It's all an indicative list, not an exhaustive list. So you can get an idea on how these current transactions are by referring to that particular direction. And the third, but the most important, I'm to say, because I told you like from the first slide, I told you like this Foreign Exchange Act was introduced more with the view of like more liberalizing or managing foreign exchange of the country. And then again, with the pandemic and all, we could do a major role when controlling the foreign exchange flows of the country. And one of the requirement, one of the area actually is about the repatriation and conversion of export proceeds. So this repatriation of export proceeds into Sri Lanka, this is a new rule, relatively a new rule. Actually, it's the rule number 5 of 2021. It's actually issued under the provisions of the Monetary Law Act, not under the Foreign Exchange Act, but under the provisions of the Monetary Law Act. And it is published in the Gazette number 2251/42. And this is effective from the 28th October 2021. So this is a recent rule where I told you like the export proceeds of the service receipts, export of goods receipts are freely permitted, but from the Monetary Law Act, this rule is there. You may, some of you may have familiar with that. Before this, in this rule number 5, there were like 4 other rules issued under the provision of the same Monetary Law Act, and it was initially introduced in 18th February 2021 regard to this conversion of export proceeds. Actually, the repatriation requirement of export proceeds is there since 2016, but the conversion of these export proceeds into Sri Lanka rupee was introduced in the 18th February 2021, that is from this year. So this requirement, but this requirements are, there are 2 requirements under these rules when it comes to export proceeds. That is, the first one is repatriation requirement, and earlier actually this repatriation requirement was applicable for only exporters of goods, but from the 28th October 2021 this repatriation requirement is there for all exporters of goods and services, not only for goods exporters but also for services exporters, as long as someone is providing services outside the country and earning in return foreign exchange from such person resident outside Sri Lanka. Those are recognized as export of services and export of goods. And then it is mandatory required to repatriate such export proceeds to the country within 180-day period from the date of shipment of the goods or from the date of provisioning such services. So the repatriation period is 180 days, and in this regard, you as the bankers have to verify the related documentary evidence, and the export has to provide these documents to you all for identify these as export of goods or services. So this repatriation requirement is applicable from 28th October 2021 for both the goods and service exporters, and it is the 180-day time period. And the second requirement under these rules, this is actually rules, not the regulations, orders, or the directions, but it's a rule which is issued under the Monetary Law Act. So this conversion requirement is rather relatively new. It is in these rules, it is required to convert the residual balance, that is, whatever the balance of the export proceeds that is left with after meeting certain authorized payments. We call them as authorized payments. So one can bring down export proceeds to the country, and it can meet these particular payments like outward remittance in respect of current transactions, withdrawal of foreign currency notes for permitted, like for travel purpose, they can withdraw funds, and they can repay their loans, they can purchase goods, obtaining services or local suppliers, even as permitted, and they can hold 1 month commitment for such purposes, and as well as they can invest up to 10% of such proceeds in export proceeds in Sri Lanka development bonds in foreign currency. So these are the authorized payments that is allowed under this particular rule. After meeting these particular authorized payments, the bankers has to mandatorily convert the residual proceeds of the export balance before the 7th day of the following month into Sri Lanka rupees. In fact, these are some temporary measures. If you may have familiar with the liquidity issues and all. These are somewhat temporary measures which we have introduced, and as well as to facilitate exporters, because before the introduction of this rule number 5 of 2021 on the 28th October, earlier it was like you have to mandatorily convert 25% of that export proceeds into Sri Lanka rupee. Now the mandatory percentage of conversion requirement is not there. Whatever the proceeds that is left with the exporter after meeting all these authorized payments, yes, you can convert into Sri Lanka rupees. You have to convert into Sri Lanka rupees. So if you go through these authorized payments, no capital payments or no payment for capital transactions have been allowed. Only these certain payments have been allowed, and on the other way, they can convert Sri Lanka rupees into foreign currency for meeting any current transaction. So there won't be any issue as such. But when someone is bringing proceeds to the country, after meeting these proceeds, whatever the remaining balance should be converted into Sri Lanka rupees. So there were some certain inquiries or certain clarifications were sought from your bankers. So in that case, under the if you could go through the DFE website, you can see that under the latest website we have issued certain clarifications frequently asked questions. In that, this particular FAQs actually gives a better clarification for you to regard to the application of these rules, because in some instances bankers may misguide or with their misunderstanding misguide the people, saying that worker remittances ended by the Sri Lankans who are working abroad to the country are also subject to this mandatory conversion requirement and all. No, these are not subject to the mandatory conversion requirement, and even in there is a 25, and so likewise the many clarifications have been given in this particular FAQs. You can leisurely actually go through this one and facilitate, and as well as abide this repatriation and conversion requirement. We talk about the scope and all. So just have a look on that FAQs as well. So in simple terms, this is applicable for both this particular rule on repatriation and conversion of export proceeds. Export proceeds include both the proceeds of export of goods as well as the service receipts for export of services. So both goods and service exporters who are residents, this rule will be applicable, and irrespective whether the accounts are meeting in the domestic banking unit or offshore banking unit or LKR account. And for all export proceeds or the remittances that's received on or after 28th October 2022. So after the effective date of this particular rule, whatever the proceeds received to the country shall be subject to the conversion requirement under this particular rule. So as bankers, you have to strictly monitor the monthly receipts and export proceeds, and ensure that the date of conversion is within the 180 days stipulated period and of repatriation and bona fide of the allowed payments when facilitating certain authorized payments, because So you have the responsibility to give or extra vigilant on when allowing certain payments as to authorized payments. So as well as to report to you have the responsibility of reporting central bank to the in the prescribed format. So this is the recent rule issued under the provisions of the Monetary Law Act, requiring exporters of goods and services to repatriate proceeds within 180 days period, as well as to convert whatever the residual balance of such proceeds in a particular month into Sri Lanka rupees upon meeting certain authorized payments. So when it comes to merchandise goods or so if I'm clear, I'll talk about export, then service, export of goods, export of services, and the repatriation and conversion requirement that is applicable for export proceeds of goods and service exporters. And next one is merchandise goods or merchandise imports. So likewise, this is since this is a subcategory of current transaction, general policy is like payments are freely permitted or the foreign exchange release is freely permitted and subject to the trade policy of the government. Trade policy can be either Import and Export Control Act or the Custom Ordinance. Even you may familiar with that part in the previous or even the recent times, many regulations have been issued under as the trade policy of the government under the Import and Export Control, limiting certain imports, limiting certain goods to import likewise. So from the Foreign Exchange Act, release of foreign exchange are permitted, but you have to bear in mind that the trade policy of the government that is applicable for import of goods to the country. So import of goods can be broadly divided into two types as to personal use or the commercial purpose. Goods can be imported either for personal purpose as well as for the purposes of commercial purpose. That is the broader definition. And this personal is actually very subjective. It can include for the use of it can be include natural persons as well as legal persons. So the personal use means both include individual as well as legal persons. And how a particular import of good is recognized as personal use, they actually there are three criteria, and all these three criteria have to be met when it comes to identifying particular import of good as a import of good for personal use. First thing is value of the consignment does not exceed USD 5,000. Okay. I mean, like for the value of the goods that is imported should not exceed USD 5,000 or its equivalent in other foreign currencies. Should not be in commercial quantities. That is, whatever the goods that is imported under personal use should not for use for reselling purpose. It should be not for resale purpose, means it should be only for personal use, like in the third criteria, goods import for personal or the own use. But as well as it should not be a quantity where one can use, one cannot use at a time, a particular time. Likewise, so all these three criteria should be met when it comes to import of goods for personal use. That is, consignment value should not exceed 5,000, should not be in commercial quantities, as well as should be for personal or the own use. And if particular import does not fulfill either of these three criteria, then you have to treat them as an import of good for commercial purpose. So let's talk about it's like this. There are particular one of your customers who is having a spare part shop, right? Or let's say computer accessory selling shop, right? In that case, but that particular customer wanted to import some accessories worth $4,000, and he reached you and he wanted to make this remittance. How you all facilitate it? First, you have to treat whether the value exceeds $5,000 or not. Then you check it. Yes, it's 4,000. Then the value is not exceeding 5,000. That is correct. Then what about is this in commercial quantities? if we run in the business of selling computer accessories, then let's say the what he have imported or wanted to import is this 10 number of accessories. In that case, does he have a purpose of selling these accessories to another person? Yes, then the last that it is not more meaty, and definitely in commercial quantities, then it is, even though if the value is not less than 5,000, these two criteria won't meet, so it's not an import for personal use. On the other hand, the same person, he wanted to bring down this particular computer, only one particular computer, and it is, let's say, $5,000. Then you again reach your bank and wanted to make this remittance. Then you check, okay, value is $5,000, that is okay. And it's the one computer, and he's disclosing this as he's going to use this for his own or the personal use. He's using his business, let's say, for making his financial and all. He wanted this wanted this computer. He's not going to resell this. In that case, these two criteria will be met. So you can recognize such import as an import of personal use. So likewise, you have to carefully verify or ascertain whether mainly the purpose of the transaction, whether he's going to resell or whether he's going to use it on his own. Are they large in quantities or what? Let's say one has again a customer let's say one lady went abroad and went to India and bringing down some 24 number of two dozen saris. In that case, the value is, let's say, USD 3,000. So you check, yes, the value is 3,000. Then the consignment value does not exceed USD 5,000. This is correct. But then again, can one particular person use 24 number of saris at a particular instance? No. So this is more than the items one can use at a time, and then you can have to verify that he has a intention of selling these sarees to other. In that case, if these two are not meeting, then you can treat such import of goods not as a personal use but as a commercial purpose is import. This identification is also important because there are certain regulations when it comes to import of goods for commercial purposes. I told you, like, so far talk about this is subcategories of import goods, like goods import can be either for personal use import as well as commercial purpose import, but these are imports and definitely these are current transactions, but that is from the Foreign Exchange Act perspective. But when it comes to the trade policy or the trade policy of the government, this is important, or this commercial your identification of goods importation as to personal nature or commercial nature is important, because for commercial, if it is an import of goods for commercial purpose, then definitely that's according to the trade policy, according to the Gazette Extraordinary Number 17393 of 2012, 2nd January issued this particular Gazette. This is the payment term regulations and payment term regulations which has issued under the Import and Export Control Act. Where the talk about 6 number of payment terms that is mandatory required to use when it comes to commercial imports, not for personal imports, but for commercial nature imports. These payment terms are mandatory, can be mandatory to be used, and for personal nature imports, these are not mandatory, but for commercial nature imports, these payments are you have to use mandatorily in terms of the Import-Export Control Act. This is not a regulation issued under the Foreign Exchange Act, but it's a regulation issued under the Import and Export Control Act. And they talk about 6 types of payment terms. What is here the payments made prior to the date of submission of the CUSDEC. You may be familiar. CUSDEC is a document where you get the you see the ownership of the particular import of goods or on the document which states the ownership of the goods which imported or exported. That document is called custom declaration or the CUSDEC. Let's talk about the ownership of the goods. So payments made prior to the date of submission of the custody. There are 4 types of payments that is made prior to the submission of the custody. That is cash in advance, documents against payments, document against acceptance, and letters of credit. And there are 2 other payment terms that can be made after submission of custody. Sending goods, that is consignment account basis and open account terms. So this particular regulations also talk about combination of all these payment terms. Like one can say you can use first advance payment, then subsequent settlement can be in the letters of credit. Likewise, any combinations have been allowed under this import-export regulation, payment term regulations. And however, I told you like this identification of personal use import and commercial purpose import is import because for commercial, as long as it's a commercial import, you have to have, I mean, it should be either of these payment terms, but not the electronic fund transfer card. Electronic fund transfer cards are the debit, credit, or the other value stored card. These cards are permitted only for personal nature, affecting personal nature current transactions. So as long as it's a commercial nature import, you cannot facilitate EFTCs for accommodating such transaction, because then again it's a violation under the Foreign Exchange Act, because EFTCs are permitted only for personal nature current transactions. And then again, it's a violation of the trade policy of the government, which required commercial imports to be carried out within this 6 payment terms. So EFTCs are not permitted if it's a commercial nature import, but for personal nature import, you can facilitate electronic fund transfer cards, not for commercial purpose import. So we can talk about these in detail now. Before going to details of these payment terms of this commercial import, if you want to have, we can have a 15 minutes break, because it's 3 o'clock. You can have cup of tea. We can break for 15 minutes. Is it okay? And we can join by 3:15. Is all good? I mean, is all okay? Or can I continue like up to 3:30 and give a break, or what? Hi everyone. I think all of you are like having the tea break now. Join again to the session. So let me continue this this session on current transaction. But before that, I have a question from Aisha, and she's asking if the worker remittances are not come under the new rule, what type of remittances can we come under new rule for personal clients? So it's like this. You all may be having similar questions, so drop a message here like Aisha. So before moving on to the details on these import payment terms or the regulations, I'll clarify this thing. I told you like for this first of all, this rule is applicable for export of goods as well as for export of services. So I told you like worker remittances are not subject to this rule because worker remittances here, actually worker remittances in the sense Sri Lankans who have gone abroad on a work visa for working abroad. So actually you missed this initial the residential status. Even in that, if you go through, if we talk on this order, I talk in the first, in the first classification, I told you like under the residential status, this residential stay, persons who have residence for the purposes of the Foreign Exchange Act has been prescribed as an order by the ministry issued under the session, and the order issued under the section 31 of the Foreign Exchange. So this particular order describe persons who are resident outside Sri Lanka. So in that case, I told you like the general demarcation is that persons who are residing in Sri Lanka for more than 183 persons who are in Sri Lanka for more than 183 days in the preceding 12-month period is recognized as person resident in Sri Lanka. In that case, Sri Lankans who have gone abroad under work visa are living abroad for more than 183 days. So they are recognized as persons resident outside Sri Lanka for our purposes, for the purposes of the Foreign Exchange Act. So Sri Lankans working abroad under work visa are recognized as non-resident or the resident outside Sri Lanka, and they earn from the employment there, and they repatriate funds to the country. So they are not a resident in Sri Lanka when it comes to application of the export proceeds repatriation and conversion rule, right? I have mentioned that this particular rule is applicable only for persons resident in Sri Lanka, right? Only for persons resident in Sri Lanka. Persons in the sense exporters of goods and services who are residents in Sri Lanka, not for the persons who are residing outside Sri Lanka. So Sri Lankan workers who have gone abroad under work visas are recognized as resident outside Sri Lanka as they live under work visas and for a period of more than 183 days are living outside the country. So they are non-resident for the application of the Foreign Exchange Act, and the sending funds by these people are not subject to the application of these rules under the Monetary Law Act. So that is the first answer for the question. That is why the work remittances are not subject to the application of this repatriation and conversion requirement. And then again, when it comes to personal nature services, I told you like under the service payments, if you see the this particular direction, I told you like this is only an indicative list, and this may be not an exclusive list. So there are a whole set of services for listed as these are the trade or business services which falls as current transactions. So you can go through leisurely, and either of this service, if the person residing in Sri Lanka doing some services, let's say it can be like simply if freelancing, someone is doing freelancing by residing here in Sri Lanka, by residing within the country, and but providing such services to a foreign persons, foreign employer, let's say, in that case, that sort of services are subject to this particular rule, because it is applicable for all the services. It can be occupational, professional, or vocational. In either capacity, it can be the one can be providing these services in its individual capacity. But as long as that particular person who is a resident at the moment and providing such services to a non-resident or the resident outside Sri Lanka and getting some foreign exchange to the country, then this application of the rule is there. So freelancing may be IT service provider as long as the employee is abroad, but the particular employee is Sri Lankan and is in Sri Lanka at the moment, and that in that sense, that nature personal nature transactions, personal nature service exports are also subject to this particular rule, because he's a service provider while being in Sri Lanka, but providing services to, also exporting such services to I told you like this demarcation of current and capital transfer. We talk about international transactions all the time on the grounds of the cross-border level transfer. So at what end the person is in Sri Lanka, service provider is in Sri Lanka, but at the cross-border level is providing their services to outside person or the non-resident or the foreigner in another country. So in that case, that sort of service exports are also subject to the particular rules of repatriation and conversion requirements issued under the Foreign Exchange Act. Hope I'm clear on that, Aisha. And if others also have same questions, please drop me a message in this message box. So if nothing more on that, you all can refer to the FAQs or the frequently asked questions which have been issued as a clarification to all the bankers and the stakeholders. So here we have responded to 15 odd questions. So you can 12 odd questions. You can refer to these questions regarding the application of the rules, so that you can get a better understanding on the rules which is issued under the Monetary Law Act. So we were here before the break. I told you imports even imports are the payment for imports are freely permitted under the Foreign Exchange Act as long as I'm subject to the trade policy. So one aspect is like whether to see whether the particular import of goods is for personal use or is it for commercial purpose. And in fact, this identification criteria, 3 criteria comes under the Import and Export Control Act regulations. So this particular gazette notification, which we recognize as payment term regulation. So this payment term regulation is again talk about this what are the import of goods for personal use. So you have to meet all the 3 criteria, not one criteria, but all the 3 criteria. If all the 3 criteria are met, then only you can recognize this as a personal use or the personal nature import. Because if it is a commercial purpose import or commercial nature import, then either of these payment terms should be used, not the electronic fund transfer card, that is the debit, credit, or value stored cards. You can facilitate EFTs for personal nature imports, but not for commercial purpose imports, right? So that is the there. And with that, I would like to shift into the actually it's some misarrangement. So I'd like to move on to now slide 38, and it's the question number 4. Before moving on to the details on these payment terms or the commercial import payment terms, let's have this question, and you all, I think, refresh after this break. And then again, we'll have a we'll revise, get this revise this regulation. So this is the question: spare part shop, let's say. A spare part shop owner imports a computer for office use worth USD 4,000 from UK. What is this transaction? This is a commercial import. This is a personal nature import. And the option C is this is a personal nature import, can even use the EFTC. And the last option is this is a commercial import and subject to the import payment term regulation. Here the spare part shop owner imports a computer for office use, and it is USD 4,000 from UK. How do you all recognize or treat this transaction in terms of the regulations? Can you all see the screen? No.
No, we can't.
Okay, sorry. Hope now you can see, right?
Yes.
Okay, sorry there. So I move into the this slide number 38, and here the question number 4, like it's about where the spare part shop owner, one of your customers, is doing a spare part, let's say vehicle spare part business. He wants to import a computer for office use, and it's US dollar 4,000. So I'm asking, what is this transaction? How do you all recognize as this transaction as to what? In fact, I would like to see the most appropriate answer rather. Only few are responding. Hope others are not falling asleep. So yes, I think you all have got the point correctly, but yes, why this is a personal nature import, because the amount is less than 5,000. Yes, that is correct. And he's importing only one computer, so you can argue, or even he can provide you the declaration that I'm going to use this for my personal use. No, I'm not going to sell this in the shop. So if he doesn't have a resale purpose, if his motive is not for reselling this computer, then the value is less than 5,000 and not they're meeting other two criteria, that is not for resale purpose, not in commercial quantities, then yes, you can treat this as a personal nature import. And because this is a personal nature import, it's not mandatory to go for the payment terms. I will be referring later, but you can use electronic fund transfer card for such personal nature current transaction. So most appropriate answer would be answer C, that is, this is a personal nature import and can even use the EFTC. So since this we talk about here, I'd like to get another example. Let's say your customer who's then again a spare part shop owner, but he's having a, let's say, 6 number of buzzers, and let's say he's having 6 number of buses on the run. He's providing, he's doing this bus services. He has buses on the road. So on the other hand, he's having a spare part shop. Now this particular company who's your customer going to import, let's say, some wheels for this shop, and it's again amounted to $3,000, and he reached your bank, and now he's saying that I want to make this remittance, so and so. How do you all recognize? Would you recognize this as a personal nature import or commercial import? First, you have to treat this. Yes, the value criteria is met because it's less than 5,000, because the amount is 3,000. But then again, you have to ask. You know about it. I mean, you know your customer. You know this customer is having a spare part business as well as he is having his own buzzer. So if he says that, you then have to ask, what is your purpose of importing these wheels? If his argument, let's say he's going to import I told you 6 number of wheels. So if he told you that he's going to use this in his buzzers, and then you have to verify that let's say if one wheel for each bus, then you can have a valid argument. He can use this for his own buses. So he's going to use this for their own use. So this is going to be a personal nature import. On the other hand, if you feel like this is not going for his own use, but he is going to sell this in their spare part shop, then you all have to verify the motive, and he's going to resell this even if 6 number or value is less than 5,000. If he's going to sell this, then it won't meet the criteria for personal nature import. In that case, you have to apply either of the payment terms, like commercial payment terms, but you cannot facilitate such transactions in electronic fund transfer cards. That's where you have to recognize import of goods for personal nature and import of goods for commercial nature. So back to these details. So I told you, like here, the payments which can be made prior to the date of submission of the custom declaration. There are 4 types of payment. That is, these 4 types of payments you made before arrival of goods to the country. Okay. In fact, actually, CUSDEC is the document where you get the confirmation as to the goods have been imported or goods have been exported to the country. And the document which shows the ownership of the goods is the bill of lading. It's actually here the documents can be either shipping documents as well as the commercial invoice. Shipping documents means bill of lading and the custom declaration, and on the other hand, that is the invoice. So these are the documents. When it comes to the shipping documents as well as invoice are the documents here we refer as documents under these payment terms. So custom declaration is where you get the proof that the goods have been arrived or could have been dispatched to the country, not the document which provides ownership to the goods is bill of lading. I think you all like familiar with these terms. First payment term is cash in advance. By definition, this is where the good for imports, goods before goods arrival to the country, you have to, or the importer has to make the payment. So this is the advance payments or cash in advance payment. And there are two regulations for this case. If the advance payment is made out of a Sri Lanka rupee account, then it is the value that is permitted only up to USD for 550,000, or it's other in equivalent foreign currency. And if the amount of the advance payment exceed USD 50,000, then you have to look for whether this particular import is supported by a bank guarantee or a standby letter of credit for the value of the amount of the advance payment, or whether this particular importer is having a special permission from the Import and Export Controller General, not from the Department of Foreign Exchange. I told you that these regulations comes from the trade policy or under the Import and Export Control Act. These payment term regulations are there in the Import Export Control Act. So when it comes to an advance payment, if the value exceeds $50,000, and again, if the person is wanted to do this particular advance payment out of a rupee account, then you have to look for whether the person is having this particular import payment is supported by a bank guarantee or a standby guarantee for the value of the amount, or whether this particular importer is having a special approval from the Control of Import and Export. Okay, here actually the bank guarantee or the standby letters of credit is similar to the bank guarantee, where the buyer in the other country, the seller in the other country is giving an assurance that regard to this advance payment. So guaranteeing the payment. So that's why when it comes to an advance payment out of a Sri Lanka rupee account, general permission is there only up to $50,000. And if it exceeds $50,000, then you have to the banker can facilitate these transactions only upon submission of a bank guarantee or standby letter of credit covering the full value of the, let's say the value is USD 65,000, then you have to cover you have to get the bank guarantee or the standby letter of credit from that particular exporter covering the whole amount, not the amount exceeding 50,000, but the value covering the entire 65,000 US dollars. So likewise, either you have to look for the approval obtained from the Control of Import and Export Control. And the second aspect of this advance payment is that the advance payment is made out of a foreign currency account. So when it comes to foreign currency account, this can be made the foreign currency account maintaining the domestic banking unit, or for which the outward remittances for current transactions are allowed, or it can be either from the offshore banking unit. So you all have in banking units either to DBU or BU. So in the DBU, if the business foreign currency account, let's say personal foreign currency account, or whatever the foreign currency account, you'll be learning, you'll be getting to know in the coming sessions. If the particular foreign currency account payment for current transactions have been allowed, yes, then in that case, for making an advance payment for commercial import, you can use such foreign currency account. And in that case, the limit of $50,000 does not applicable in that sense. So when it comes to an advance payment, let's say your customer reaches you and wanted to make an advance payment for importing some goods to the country, then you have to see whether this particular advance payment is made out of a Sri Lanka rupee account, or is it going to be made out of a foreign currency account. And if it is out of a rupee account, then if the limit threshold is USD 50,000, if it exceeds, you have to seek for either the special approval, or you have to verify a bank guarantee supported. You have to support this advance payment through a bank guarantee. Or if it is a foreign currency account, yes, you can go ahead as long as it's for such foreign currency accounts if the current transactions have been allowed. Likewise, and that is the currency account type. And when it comes to there's another regulation under this particular gazette notification or the payment term regulations issued under the Import and Export Control Act applicable for cash in advance. That is the enforcement periods. Enforcement period in the sense you have to verify what they're going to import. Let's say if the particular importer is going to import machinery and heavy equipment, then the regulation itself provides that you cannot exceed 365 days after making such an advance payment. You have to bring such machinery to the country within a period of 365 days. That is within a period of 1 year. If it is an import of machinery and if you have facilitated through an advance payment, then you have to verify, you have to get it ensured that such machinery are being imported to the country within a period of 1 year. And then again, if it is in all other goods, let's say not for machinery, but all other goods like, and then again, the second category like goods for which payment is done under a combination of advance and letters of credit. I'll be talking letters of credit in the next slides, but I told you like under these import payment term regulations, you can combine all these 6 payments. So it can be advance payment plus LC or the advance payment plus DP or something like that. You can go for combined payment terms, which was not there before the 2012. So now the combination of payment terms are allowed likewise. So if the goods have been imported to the country under combination of advance payments and letters of credit, then again, this period can be up to 365 days. And goods where the period is specified in a bank guarantee or standby letters of credit. If let's say these goods are imported under bank guarantee or standby letters of credit, in that case, period covered by the bank guarantee or standby LCO, period not exceeding 730 days, whichever comes first. That is the enforcement period when it comes to import of goods under the bank guarantee and standby LCs, where if the goods are imported supported by a bank guarantee or standby LC, then the period covered from that bank guarantee or 730 days, whichever comes first, that is the enforcement period that where goods have to be brought to the country. And all in respect of all other goods, the general period is 180 days. That is, you have to get ensured from the importer that once an advance payment made, that particular goods are being imported to the country within a period of 180 days. That is the enforcement period. That's what, when it comes to the cash in advance, you have to ascertain that first thing is from which account this particular advance payment is going to made. Is it from a rupee account or is it from a foreign currency account? Then again, what type of goods are being imported under advance? If it is machinery, or are they being supported by a bank guarantee or combination of advance plus LCs, or if not any other good, then this time period for import of goods into Sri Lanka from the date of remittance is there. That is the enforcement period, and you as the bankers have the responsibility when it comes to ensuring this enforcement period in terms of the in line with the government this import and export control regulations. That is for the advance payment. The second payment term, or that can be utilized for use for commercial import, is letters of credits. Here, letters of credit, I think you all may know that letters of credit simply, it's one of the most popular and safest payment terms for imports. And general permission is there for bank authorized dealers like you all bankers to issue, extend the validity period, and or amend the clauses of an LC's letter of credits established under the Uniform Customs Practices guidelines. So UCP is the standard where you all establish letters of credit. So as long as it is if that is established under the UCP guidelines, general permission is there for bankers to issue, extend the validity period, or amend the clauses of letters of credit when it comes to import of goods for commercial purpose under letters of credit terms. Here in this case, the bankers are assuring such payment for the respective export in overseas on behalf of the local importer. The bank actually guarantees the import payment so that it can be treated as one of the safest payment terms under the international trade. And these particular import-export control regulations applicable for payment terms states that it's must for the establishing letters of credit for motor vehicles, not for any other goods, but for motor vehicles. You cannot utilize, you cannot use other payment terms like advance payment or the other payment like document against payments or document against acceptance. Here, for motor vehicles, it's mandatory use letters of credit. You have to have letters of credit for such purposes in terms of this payment terms regulations. So Gazette Notification 1739/3 of 2nd January 2012. This is the Gazette notification. So it states clearly that vehicle imports to the country should followed by letters of credit. Like you all now see that under the Foreign Exchange Act, these all are, all of these are current transactions. We are not talking about certain goods LCs are okay, LCs are permitted for other goods LCs and all. We are not talking about payment terms, but we are in general talk about the foreign exchange transaction or the nature of the transactions, which is a current transaction. But under the payment regulations of the Import-Export Control Act, we talk about what are the payment terms that can be used for import of goods for the country. I hope so far it's clear. So next is the documents against acceptance. This is also one of the payment terms that you can use before the arrival of goods to the country. I told you like here the documents means shipping documents as well as commercial invoice. So these are the documents, and by this definition, documents against acceptance is where you as the bankers, you accept bill of exchange, which states that the particular importer is guaranteeing the payment for import in agreeable with the exporter in overseas, that after this much date I'll be making the payment for this particular import. So he's getting a credit period under the document against acceptance. So that's what where the importer agrees for a bill of exchange, and that bill of exchange is provided to you to the banker, and then once the bank receives such bill of exchange, then the banker can release the document. I told shipping documents where you can see the ownership of the goods and all commercial invoices. And once the importer submitted this bill of exchange to the banker can release the documents. Then the importer can get released the goods from the customs. That's the mechanism that follows under document against acceptance. So in that case, then again this import payment term regulation talk about payment cannot be made for import bills or under the DA bills after expiring 180 days from the date of maturity without obtaining the permission from the control of import and export. That means I told you like this is a payment term where the local importer gets the credit period for their import settlement from the foreign seller. In that case, once the parties agreed for a particular period, and payment for such imports have to be made within a period of 180 days from the date of maturity of the agreed credit period of this bill of exchange. It is from the date of maturity, not from the date of import. It's from not from the date of the bill of exchange, but from the date of the date of the maturity. That means where at the end of the credit period that the both parties agree, and you get another 180 days for settlement of these imports for commercial purpose under DA or the document against acceptance. And any deviation to that effect, you have to seek the special approval from the control of import and export, and not from the director or the Department of Foreign Exchange. So, and there's a monthly reporting requirement, and even unpaid import bills to the control of import export have to be reported. The bills not settled within a 180 period should be reported to the control of imports and exports in terms of this payment term regulation. This is keep in mind that actually this here 180-day period is applicable from the date of maturity of the period. Parties may agree for, let's say, 90 days, or the 180 days, or 360 days. Likewise, importer and the foreign exporter can agree for a credit period, and upon lapse of that credit period, then the payment has to be made within a 180-day period, not from the date of the bill. Bill can be entered it today, but they get in a credit period. Upon lapse of such credit period, another 180 days period is there before the maturity of the bill, and that within that period, payment for such imports under DA bills have to be made, and any deviation, as I told, shall refer to the control of import and export. And this is the so far I talk about document against acceptance, document against, and here another payment actually is there. I think I'm missing the slides, but I can tell it under. Here I talk about cash in advance, document against payments, document against acceptance, letters of credit. So I talk about advance payments, document against acceptance, and letters of credit. And next one is document against payment. And the document against payment, or the DP in the sense, importer provided all the shipping documents or invoices to the banker. Then once that documents are seen or at site, then you can release funds for such import. That's what the payment will be happen under the document against payment at site. There won't be any credit period like for letters of credit or like for document against acceptance. Under the DP terms or the document against payment, for such imports, payment has to be made at site, on site, not in advance, but at site, neither getting a credit period like for letters LC or the DA. That's for document against payments. And all these 4 payment terms are prior to arrival of goods to the country. And once the goods are arrived to the country, you can follow either of these 2 payment terms, that is consignment account basis or open account terms. And the open account in the sense, goods are imported to the country. It's actually the opposite of the advance payment, where the advance payments, payment is made first, then the goods are being imported to the country. But when it comes to open accounts, goods are imported to the country first, then you getting a credit period, and upon lapse of the credit period, payment has to be done. So arrival of goods is first when it comes to open account terms, and for open account terms, as well as for consignment account terms, payment shall be made within 360 days from the custom day. And the banks must verify with Sri Lanka Customs datamate the outstanding amount due on such transactions before making any payment. That means the bankers, there's a separate system called RC-CUDA and all, which connected this customs and banks network. So in that case, if it is an open account payment term or consignment account basis payment term, consignment account basis is actually not that very popular, based on based on the trust of the parties involved transaction, like ornamental fish, magazines, and that sort of goods are being imported under consignment account basis. Even in that case, you get a credit period and gets the imported goods first, and then on the latter day, you can the importers have to do the payment for such import. So in that case, open accounts and consignment account basis, you get the importers get benefited. It's the most less risky payment terms for importers, because they get the goods imported first. Likewise, these are the 2 payment terms that can be made after arrival of the goods. That is upon submission of the custom declaration. These 2 payment terms can be made. So this is the payment risk diagram for your reference purpose. I have put this slide in this case. So for exporter, most secured payment term would be cash in advance, less HC is here. And for importer, most least secured would be cash in advance, as we make in the fund advance payment first and then get in goods. And for importer, open account and consignment account is most secured, and LC is one of the most popular as well as secured payment term when it comes to all these 6 payment terms. I think this question we have covered earlier, and this is some for your homework, I would say, because here we have no mechanism to get the answers, but let me have this diagram, have this table. It's talk about the payment terms that can be used for commercial imports, and here you have a column for amount, and here you have the column for regulation. So advance payment, I have told you that first, if it is from a LKR account, then there's a limit that is up to USD 5,000 or its equivalent in other foreign currency. And if it is from a foreign currency account where the current account transactions have been permitted, then there is no such threshold limit under the for advance payment. And there is again requirement of as to enforcement period. That is, you have to bring down the goods to the country within that enforcement period if you made or if you facilitated an advance payment. That is the general regulation is where goods the payment for import is made prior to arrival of the goods, and DP payment is made at site, and there is no apart from these advance payments, for all other payment terms there is no limit, or then there is no threshold limit for such payments. So you can DP, DA, LC, open account, consignment, you can go with any payment amount. And for DP, the payments are being made at site. Once the document or the shipping documents have been released, then the shipping or the invoices are released to the customer once the payment is made. And for DA, a bill of exchange is signed between the importer and the exporter, agreeing on a credit period. And upon lapse of such credit period, within a 180-day period, before the maturity of the from the date of the maturity of the bill, you have to make the payment, and any extension or any deviation to such DA bill should refer to the controller of import and export controls. And LC is one of the most secured payment term, as I told you, as where you as the bankers guarantees payments on behalf of the importer. And for motor vehicles in Sri Lankan countries, under this payment term regulations, it should be followed definitely by LCs, not from other payments. For any other goods import, you can follow the payment terms, but for motor vehicles, it should be under LCs. And for open accounts, where you get goods first, and our payment should be made within a 365 days period. Then again, for these payment terms, if any deviation, you should refer to the control of import and export control, and the consignment account also. On that basis, 365 days period, you have to make the payments. Though this is the general regulation I have picked from this particular the 2012 Gazette notification, or the regulation, payment term regulation is issued under the Import and Export Control Act. And I think this is this Gazette notification. It's they are in the Import and Export Control website also. This is particular regulation, and subsequent to this, even in the recent time with the pandemic, and in order to control the certain imports, there have been like regulations time to time issued by the Import and Export Control Department. So all these regulations you should be bear in mind when it comes to facilitating current international transaction, because for our case, that is for the application of the Foreign Exchange Act, all these are trade transaction or the current transaction, so can release foreign exchange, but you have to abide, or they have to have a look on the other regulation. There may be enforcement period, there may be other reporting requirements, there may be other limitations where you can use certain payment terms, so and so. You have to verify, or you have to abide by the trade policy of the government. I hope so far I'm clear, and if you have Any, like, if you want to anything, if you all to get clarified anything on these areas, can ask or drop messages. If not, yes, no one. And any gray areas, definitely just drop a message here. So far they talk about payment terms, like agreed between the parties, and this is another. This is not a payment terms. In fact, it's import of goods without payment in foreign exchange. This is not a payment term, but the payment term regulations are referred under the Import-Export Control Act also covered this. This is where goods are being imported to the country under no foreign exchange involvement basis. Where there is no outflow. I told you, like current translations, there is an outflow of foreign currency, and in return you get the same worth of machinery, same worth of goods, or same worth of service allowance. But this, then again, here also there is an goods are being imported to the country, but there won't be any outflow of currency. And these type of goods imported on NFE basis are also referred into this particular 2012 Gazette notification issued by the Control of Import-Export. And it talks about goods can be imported to the country on NFE basis as long as if the value of such goods does not exceed USD 5,000, no, it's equivalent in other current currency. And when the goods imported on NFE basis, if such value of the items exceed USD 5,000, then please don't refer these cases to Foreign Exchange Department or Central Bank of Sri Lanka, because the authority in terms of this particular regulation lies with the Director General of Customs. Because sometimes even bankers, sometimes from the other the importers itself, they refer these matters to central bank. But when it comes to import of goods under NFE, this regulation has granted authority to the Director General of Customs. So the Director General of Customs has the discretion for allowing such release of goods to the country which exceed USD 5,000. So it's not something related or something comes under the purview of the Foreign Exchange Act, but something to be dealt in accordance with the custom laws and the Import and Export Control Act. So that is the trade policy of the government, where goods imported to the country with no foreign exchange involved basis. And I think so far we talk about trade transactions where two parties basically involve import and export, like for import of goods and for import of goods. So now the next area is under on-top trade transactions. And I told you that in earlier cases, there were only two parties, either importer and the exporter, buyer and the seller. But when it comes to on-top trade transactions, this type of offshore transactions, you can see three parties. It's not a typical trade transaction where you can see a buyer or a seller or the supplier, but you see tri-parties or the three parties in this type of trade transactions. There's an ultimate buyer. In this blue rectangle, you can see ultimate buyer is in overseas, and there's an ultimate supplier, as well as your customer, who is the on-top trader or the intermediary of this trade transaction, is in Sri Lanka. So this particular intermediary or the on-top trader is facilitating this transaction. He is facilitating the import and export, and then in that purpose, he get a profit or the margin. And this is where goods can be imported from one country. Let's say here from the Japan to India, goods can be imported or goods can be sent. Not necessarily these goods can be reached to the country. Goods either can reach to the Sri Lanka or not, but it's not necessary. But definitely when it comes to on-top trade transactions, this document I told you earlier in the document, that is shipping documents and invoice and all, this document should route to Sri Lankan banks plus the financial flow. That is the requirement when it comes to recognizing on-top trade transaction, but not necessarily the good flow. apart from the goods flow, goods can reach to the Sri Lanka and again re-export to another country, or even goods may not reach to the country. But definitely the documents related to such import and export, let's say from here the ultimate supply is in Japan, then in that case documents will be coming to the Sri Lankan local intermediary, and then he invoiced to the ultimate buyer who is in India, adding his margin, and then again from the India he gets funds or inward remittance to Sri Lanka, and there's an outward remittance for the ultimate supply in another country, and then the entrepreneur trader or the local intermediaries retains a profit margin from such transaction. And all this happens through custom bonded warehouse, not necessarily this happens through the custom bonds, which generally treat as some territory outside the country. So goods can reach to the custom bonds and get re-export, or may not come in, or directly export from a second country to another country. Likewise, so goods flow may not necessarily come, but financial and documents flow should follow the Sri Lankan banks. And you have to, as the bankers, when it comes to entrepreneur trade transaction, you have to ensure that sufficient margin will be there for local trader. Earlier, actually, under the Repealed Exchange Control Act and all, there were certain payment terms under the Exchange Control Act. Then Exchange Control Act got to application of entrepreneur trade transaction. But under the Foreign Exchange Act, we are not going to such minor details, but we talk broadly on this trade transaction, this similar offshore transaction. But the requirement is you, as the bankers, have to ensure that sufficient margin is retained in Sri Lanka. That is, inward remittance should be higher than an outward remittance that is from the Sri Lanka, ensuring margin to the entrepreneur trader. And then again, if I connect this to the rules which I mentioned earlier regard to export proceeds on repatriation and conversion requirement, this particular entrepreneur trade transaction, we treat this as a service or the trading service. So the profit or the margin that gets by the intermediary or the local entrepreneur trader out on similar entrepreneur trade transactions recognized as the service export, the service, the gain he gets from the facilitating such entrepreneur trade transactions. So this profit margin retain the profit margin, or in this example, let's say $1,000, that is subject to the rule of conversion and conversion. Not the let's say if the inward remittance is 10,000 is fully getting by the local trader, and not that 10,000, but out of that 10,000, you make the outward remittance relevant to the ultimate supply and retain here locally such margin, and that particular margin for the entrepreneur trade services that will be subject to the particular rules issued recently under the Monetary Law Act. That is the conversion requirement. And when it comes to this is, as I told, the textbook definition can be given like this for your reference. It is a facility available for a country to import manufactured or unmanufactured goods from one country free from custom duty and other levies for re-export to another country with a value addition. And processing should only take place in the custom bonded warehouses. HS code should remain the same. Either you can make some processing, but one other condition is HS code should remain the same. And from our part, from the Foreign Exchange Act, the requirement is you have to ensure the sufficient margin is retained in Sri Lanka, and that margin is subject to the rules and issued at the monetary law. That is the regulation of the requirements when it comes to entrepreneur trade transactions. Then again, these are some of the ways or the mechanism where you can see these are the entrepreneur trade methods. So goods can be imported to be stored in a custom bonded warehouse, designated bonded area until re-exported to a third country. Repacking, relabeling, simple processing of goods imported carried out in a custom bonded house. It can be repacking or relabeling, or goods can be directly export from another country to import from another country to another country. So without goods physically arriving in Sri Lanka, or even it can be transferred from a ship or aircraft to another within a port in Sri Lanka. So these are some of the methods or ways where you can see entrepreneur trade offshore transactions. And in fact, the direction number 2 of 2021 on current transactions, we talk about this type of entrepreneur trade transactions as also one of the current transactions where you have the You have to establish bona fide or the due diligence on these transactions and facilitate accordingly, without referring for any matter on this for the central bank. So this is the general policy. Again, payment for importation of goods for e-export purpose are freely permitted, subject to the trade policy of the government. Because it is in this case also trade policy is important, not the foreign exchange. From the foreign exchange pact, I told you like under the foreign exchange pact there are no payment restrictions or but when it comes to trade policy of the government, there are certain items or the certain goods which cannot facilitate under unfair trade transactions. There are certain limitations. So you have to go by this trade policy of the government on the application of unfair trade transaction. And what is our requirement is the local intermediary should ensure sufficient margin, and there is no restriction on agreed payment terms, and margin income shall be subject to the rules. That is the new requirements that followed with the rules. That is the general policy. Hope these unfair trade transactions or these tri-party transactions are clarified to all on the same. Any questions up to now? Back to here. Seems like current transactions are so boring. You all don't have any questions, or I think everything is clear. If so, I'm glad. And if I'm to move on. So I talk about this is the types of current transaction. Now let's if I'm to move on the first initial, the key diagram here, I talk about the transactions that is definitely differs from transfers and local international transactions. And this international cross-border transaction, we again talk about current and capital. Capital will be covered in the next session. So under the current transactions, we talk about foreign trade services, and these are some of the current transaction examples. And we talk about the imports, exports, and the regulations related thereof, and again unfair trade and the services, personal and commercial energy imports, and all. So now some other type of, I told you this particular direction talks about largely on the current transactions. You have many current transactions. If you go through this direction, you can see many. It's actually a long list of current transactions. We have mentioned for the ease of reference of all of the bankers. In that this direction, you can see one type of transaction as to travel allowance. Okay. This is the travel allowance. Before before going to detail on this, I would like to would like to see an answer from you all. In general, what's your understanding on, let's say one person or a customer is coming to you all and state that I want to go abroad and want to get foreign currency. And my requirement is he wanted to say, let's say he wanted to travel to USA and for a let's say 20-day period and want to obtain foreign currency for such foreign exchange for such purpose, let's say up to USD 20,000. So what's your understanding? Can you facilitate this on how what's your understanding? He wants his requirement is like say I want my travel allowance is foreign exchange up to USD 20,000. I'm going to stay there in USA up to 20 days, and he's having a return air. Normally you all be looking for return air tickets and all as to verify whether this particular person is traveling and returning to the country and is something. So what's your view on this? His requirement is USD 20,000. Can you facilitate this foreign currency requirement for travel purpose? Yes, no, or if not, then what's the amount you can facilitate? And I see some answers, please. Am I clear on this question? Like my question is for you. You want, I mean, the customer wanted to obtain US dollar 20,000 foreign exchange for his travel abroad for 20 days, let's say for short term, right? It's a short term, right? He's having a return air ticket. Now he reaches your bank, and can you all release the foreign exchange up to USD 20,000, or would it be less than something USD 20,000? If not, you can't. You are saying you can't facilitate this thing. That's it. Yes, someone has gone through the slides. Yes, one answer is there. Can anyone else also give a try? So all of you all are having the same answer, is it? Yeah. Okay. Yes. Yeah. People. I mean, you all. Some. I mean, fewer participants are saying that yes, we can't. Only 5,000 is the limit, so that we can allow only USD 5,000. Yes, you are correct to a certain extent. Actually. My career was like for foreign exchange, and it's the travel allowance. And yes, the travel allowance, if the person in or resident in Sri Lanka is traveling abroad for short-term purpose, actually, which can be included for travel, leisure, training, medical treatment abroad, and all for short-term purpose. Yes, you can issue foreign currency notes as their travel allowance, maximum up to USD 5,000. But here, if he wants USD 20,000, there is another mode of facilitating this transaction. From foreign currency note form, it's 5,000. You all are correct. But when it comes to foreign exchange is broader form than foreign currency note. It includes currency, coins, notes, drafts, travel cards, so and so. From foreign exchange, foreign currency notes, this limit is there, USD 5,000. Or its equivalent in other currency, you all are correct. But if you want something in excess USD 5,000, you can facilitate such transaction, but you have to verify that this request is reasonable. Whether he's going to stay there 20 periods, so would that be the normal living cost in that particular country? You have to tally, or you have to match this with the duration of staying overseas, and the duration of and the cost of staying abroad for such period. And with that all calculations, if something exceeds USD 5,000 in foreign currency notes, you can facilitate through the mode called foreign travel cards. This is for foreign travel cards. You can upload the travel allowance anything beyond USD 5,000, because we have not specified any limit when it comes to foreign travel card. But only the requirement is where it's actually, you may familiar with this foreign travel card. It's a value stored card where you store the value of the travel allowance for foreign travel card. There's no limit as such, but you can issue these foreign travel cards either from foreign currency account, either from a rupee account or foreign currency account for which the travel allowance is allowed or as a permitted debit transaction. But the only requirement is here, you cannot upload, as let's say your customer is staying abroad for more than 20 days and now he wanted to get this foreign travel card upload. No, that upload requirement is not permitted for foreign travel cards. Initial upload is only permitted, but for subsequently, while the traveler, the person who went abroad for travel purposes, as long as he's staying abroad, you cannot reload this foreign travel card. And the other requirement is once the particular person returned to the country before lapse of 90 days period, this particular amount should be the value stored in this unutilized portion should converted into Sri Lanka rupees. That two condition is there when it comes to foreign travel card. One is you cannot reload foreign travel cards while your customer is in abroad. And the second thing is, upon his arrival to the country, before lapse of 90-day period, you have to convert this foreign travel card, the funds in the foreign travel card, either into Sri Lanka rupees, or deposited into the same account where you have same foreign currency account where you have debited the foreign travel card. That's the two requirements. But when it comes to threshold limit, unlike for foreign currency notes, for issuance of foreign travel cards, there is no threshold limit. You can provide the facilitate such short-term purposes travel allowances beyond 5,000 through these foreign travel cards. That is the travel allowance. And then again, there's another, if you talk about these directions, we talk about under the travel allowance. You listen to the persons who called as immigrants in the next sessions. Immigrant is simply a person where Sri Lankan who has gone abroad under PR or permanent residency or citizenship in another country. So when it comes to immigrants, that's immigrants obtaining travel allowance and traveling. Let's say immigrant or the foreign national is currently living in Sri Lanka or working in Sri Lanka, and he wanted to go to his other country where he's having the citizenship or the residential state. In that case, that in the way, if he wants to travel to that particular other country where he has having the citizenship, then that is subject to the migration allowance. You will learn about this migration allowance. If for the moment, if you don't understand, forget about it, because there's I told you like these all about all about in other current transactions, but there's something called capital transaction, and the Sri Lanka is still capital account is controlled, or there are limitations, not fully open. In that sense, we have controlled certain capital transactions, especially in this juncture. So likewise for immigrants getting maybe you may be having friends of your relations and all having permanent residence in another country, they can claim this migration allowance, but there are limitations. Likewise, for anything, the person currently a PR holder is in Sri Lanka and working in Sri Lanka and want to travel to the other country. In that case, this foreign travel allowance, this USD 5,000 or anything exceeding through foreign travel card is subject to the migration allowance, because there is a limits of immigrants to claim. Likewise, this travel allowance, in general terms, for any person in or resident in Sri Lanka traveling abroad for short-term purposes, this is the allowance, that is foreign currency notes up to USD 5,000. Actually, before this, it was USD 10,000. But since last year, March, this is actually reduced to up to USD 5,000. And you can provide any travel allowance beyond that through foreign travel card, subject to establishing bona fide or the verifying the documents to that effect. You may be verified written articles and all for your assurance, but we haven't specified to look so also which document to look for, because in fact these are current transactions. In fact, for overall, when it comes to, if I'm to talk overall transactions, current transactions, like for import of goods, export of goods, you can verify documents like CASDEC and all, but services, there may be not documents to verify as to such, but you have to pay like extra vigilant on these transactions when it comes to facilitating all this trading goods, services, and this travel, all nature transactions. Okay, next is about import and export of exports and holding of foreign currency. So far, the general concepts of current transactions that is related to the direction number 2 of 2021. This is the direction that is applicable for current transactions, if you can go through. And since we talk about travel allowance, then we can have to talk about import, exports, and holding of foreign currency. This is not comes through a direction, but it's an order issued by the minister under the Section 8 of the Foreign Exchange Act, and this is the Gazette Notification 2213/39, and the latest is latest is issued on 3rd February 2021. This Gazette Notification or this particular order, I told you like under the Foreign Exchange Act, we talk about regulations, orders, and the directions. And for current transactions, this is a direction. And now we're talking about import, export, and holding of foreign currency. This is where an order has been issued under Section 8 of the Foreign Exchange. Section 8 of the Foreign Exchange actually talk about how one can hold or possess foreign currency. So under this particular section, there's an order issued by the minister prescribing regard to import, export of holding of foreign currency and Sri Lanka rupee. So that's Gazette. This order is, now I'm going to talk, import and export of foreign currency. Any person departing or arriving in Sri Lanka may carry any amount of foreign exchange acquired legitimately in any form. Any form in the sense currency notes, bank drafts, checks, or travel. That is, any person can depart or arrive in Sri Lanka. They can get or they can carry in their hand any amount. There is no limit for this carrying amount or carrying amount when it comes to any person who is departing, that is going from Sri Lanka or coming into Sri Lanka. If they carry any amount of foreign exchange, I told you foreign exchange is the broader word. It can include drafts, currency notes, coins, travel cards, so and so. This foreign currency, if any person is going from Sri Lanka or coming into Sri Lanka, they can carry any amount. We don't have any threshold and can be on for every form. And however, if there is no threshold limit, there is a declaration requirement. Declaration requirement to the Custom Department, and that is where if the total value exceeds USD 15,000, this is applicable for both arrival as well as departure. If person coming or going out and carrying foreign exchange exceeding US dollar 15,000, then they have to declare to the Sri Lanka Customs that's on this such foreign exchange. And if the person is arriving and again intends to take back foreign currency notes, then in that foreign currency notes exceeding US dollar 10,000, in that case also there is a declaration requirement to Sri Lanka Customs. First instance is where the value of such foreign exchange exceeds USD 15,000. This is applicable for both arrival as well as departure. And the second instance is where the person arrives in Sri Lanka and again he wants to take back some foreign currency notes exceeding US dollar 10,000. Then for some take back foreign currency notes, and if such amount is exceed US dollar 10,000, then again he has to declare to the Sri Lanka Customs. And the third instance is where a person is departing, carries foreign currency notes, and if that amount exceed USD 10,000, then again there is a declaration requirement to the Sri Lanka Customs. That is the general order. Under the order 8, you can see, you can get download all these orders, regulations and other publications and all through this DFE website. We have this order issued under Section 8 talks about, you can refer to this particular Gazette notification. It's talk about import and export of foreign currency. So this is the general requirement for when it comes to import and export of foreign currency. And there's no threshold limit, but there's only a declaration requirement. And for that declaration requirement, there are certain limits. That is the general thing. You can carry or you can take back or take in any amount of foreign exchange subject to this declaration requirement. This is in fact actually for bankers, this is important because it's I told you like we have introduced certain foreign currency accounts under the Foreign Exchange Act, and under these foreign currency accounts, we have allowed certain permitted debits and permit credits and all. And in some instances, we have mentioned that if the custom declaration is certain amounts exceed 15,000, and with the custom declaration, you can get this deposit If it is less than something USD 15,000, then declaration to the bank, and then you can deposit this foreign currency to the foreign currency account. Likewise, under the permitted debits and credit on each account, we have mentioned on this declaration requirement. So your understanding on how much foreign currency can someone bring into the country as well as can take out of the country, what are the declaration thresholds that is applicable in that case, likewise, is important according to this Order 8 issued under the Foreign Exchange Act. And this is about foreign currency or the foreign exchange. And when it comes to Sri Lanka rupees, there's a threshold limit for where person in or resident in Sri Lanka may take out or bring into Sri Lanka. That is Sri Lanka rupees 20,000. This is the threshold where a person in or resident in Sri Lanka can bring in or take out from the Sri Lanka. This is LKR 20,000. And this order again talks about import-export as well as holding or the possessing of foreign exchange. So any person in or resident in Sri Lanka may retain in possession foreign currency notes up to USD 15,000 or equivalent. And this requirement, in fact, this is from the last year, July 1st, that onwards, this requirement has been increased. Earlier it was USD 10,000, but now after 2020 after July last year, the person in or resident in Sri Lanka can retain his possession foreign currency notes up to USD 15,000, and that is applicable for, they can retain such foreign currency notes up to any period, and as long as if such foreign currency notes represent either of these three methods. That is, first one is, that is, if that foreign currency notes represent the unutilized portion of the foreign currency obtained from the bank or the restricted, even in fact, you may learn about who are the persons called authorized dealers. I told that authorized dealers are the licensed banks in Sri Lanka that permitted to buy, sell, exchange foreign currency. And there are another category of person called restricted dealers for the purposes of the Foreign Exchange Act. They don't have similar authorization like for authorized dealers to deal in foreign exchange. They do have limited foreign exchange activities, like you all may be familiar, like money changes. They do by exchange foreign exchange likewise. So they do recognize as restricted dealer for the purposes of the Foreign Exchange Act, because they are limited only to certain aspects, certain areas of the foreign exchange dealing activities, so certain foreign exchange dealing transaction. So there are a category of persons called restricted dealers. And even some money changers can issue foreign currency notes for travel purpose. In that case, if that particular USD 50,000 or its equivalent denotes something the particular person obtained from authorized dealer or restricted dealer for travel, and if can satisfy, if can prove that that is the unutilized portion of such foreign currency, then that person in no resident Sri Lanka can retain such foreign currency notes up to any period, up to USD 50,000 for any period. And foreign currency, the second is where foreign currency received from non-resident as a payment for goods sold or services rendered or other legitimate sources. That is where this audits are provided. Let's say a particular hotelier is there, the hotel is providing hotel services to a foreigner who's going to stay in that hotel. In that case, the hotel can accept foreign currency for the hotel services provided to such foreigner, that is, who is a non-resident, and that foreign currency up to USD 15,000 they can hold for any period. That is the second way of holding foreign currency in possession up to USD 15,000, as long as it's a legitimate source, and if that is for a payment for a goods or services supplied to a non-resident, then you can accept foreign currency. And the third is where foreign currency notes withdrawn from personal foreign currency accounts or business foreign currency accounts for travel abroad. That is where I told you, like, for individuals, we do have foreign currency account type called for personal foreign currency accounts for business as well as for individual. Largely for business or foreign exchange earning purpose, we have business foreign currency account. You may be, we will be talking on this in detail, and still you are familiar with this account. If the particular account holder has withdrawn foreign currency notes out of this PFCS or BFCS for traveling abroad, earlier I talked about travel allowance, it's up to $5,000 notes. If one has withdrawn their travel currency notes as for traveling abroad, and if it's if it's up to $50,000, then can retain for any period according to this particular order issued under Section 8 of the Foreign Exchange Act. So they are if the one possesses some foreign currency notes not in a way as specified in this order, then it's a deviation or it's a violation under the non-compliance under this particular order. So all the three ways where one can hold this foreign currency is if it's something they withdraw from PFC or BFC for travel abroad, or if something they provided services to a foreigner or provided goods to a non-resident and get some foreign currency, or again some unutilized portion of the foreign currency purchased from authorized dealer for traveling abroad. This is also important because in next sessions you will be knowing that even now we have allowed personal foreign currency account to be opened by persons in residence in Sri Lanka from the foreign currency notes they have obtained previously as travel allowance. But if someone is not maintaining currently PFCA, because earlier it was permitted only that if something is withdrawn from PFCAs, then as travel allowance, they can again get it deposited to the PFCA. But we have like more liberalized now since this March 2021. One can even one has obtained travel allowance upon converting Sri Lanka rupees, right? They can again deposit into a PFC, or they can again open a new personal foreign currency account. You can open a personal foreign currency account on behalf of such customers that credited this travel allowance, which is the unutilized foreign currency notes. But again, this order is there. One can retain such unutilized foreign currency only up to USD 15,000 only. That is there. The cap is there. Beyond possessing, if anyone possesses foreign currency note beyond this amount, that's the clear non-compliance under the order, because it's the USD 15,000 and it can be made only either of these three ways. That is the possession of foreign currency by persons in or resident in Sri Lanka according to this particular order issued under Section 8 of the Foreign Exchange Act. Then again, this talk about non-resident. So far we talk about for resident, this is up to USD 15,000, and it is also should be formed either of this way. But for non-resident in Sri Lanka, they may retain any amount of foreign currency acquired while abroad or withdrawn for foreign currency account maintained with banks. Non-resident, if they've maintained foreign currency, I told you that the personal foreign currency accounts can be made by non-resident as well. So if that particular non-resident maintains a foreign currency account here in Sri Lanka, and they can withdraw funds at any time and acquire, if they acquired such foreign currency from abroad, they can hold any, they can possess any foreign currency without any limit. So this threshold limit is not applicable for non-resident according to this particular order. Okay, sorry, I missed the question. Is there any other reason to limit up to USD 5,000 or equivalent? Is there any other reason to limit up to? So only reason is to stop the flows of foreign currency to the other country. Yes, definitely. I mean, I told you that there are certain regulations, directions, orders which we have issued in recent times, especially during the pandemic. So this is one of the measures. Actually, if good times which may issue, I mean, we may increase these amounts or hard form with the liquidity available in the banks and all. But in the bad times or the difficult times, we have to have certain control measures, in fact, to control the outflows. which may adversely affect our exchange rate or the reserves of the country. So one of such measures is to limiting the foreign currency notes which one can or the person can get to when it comes to travel. Person can get as travel allowance. So that is somewhat measures we took with the pandemic. That's what it was reduced to 5,000, which was before 10,000. I hope I answered to no one. And because earlier also I told you, like my starting slide, I've mentioned that these Foreign Exchange Act and the Foreign Exchange regulations, orders, directions, and all we are taking as measures mainly to control the outflows as well as to encourage inflows to the country. So that's what the certain directions or the rules or the orders are in place at the moment, solely to preserve the foreign currency reserves as well as to like facilitate liquidity in the domestic foreign exchange market and also to support the stabilization of the exchange rate. So all these are in mind when it comes to issuance of all these. There may be a whole set of regulations, orders, directions. Even you may be like. It may be difficult for you all to go through sometimes, but all these are for the betterment of the support or the outflows or encourage inflows of the country. Okay, and hope no questions for the moment. And next is on the this is also part of this particular order I'm referring to. It's about acceptance of foreign exchange. So who are the people who can accept foreign currency within the country? I'm talking like transactions within the country or transaction within the state should be carried out in the local currency, because in Sri Lanka it's not legal tender. Law is Sri Lanka rupees, not the other currency, not a foreign currency. So who are the persons who are permitted to accept foreign exchange within the country? Any person, foreign currency can be accepted by a person carrying on a permitted business under a duty-free concessions at ports of Sri Lanka. If a particular customer is a duty-free shop provider or duty-free service provider, irrespective of the residential status of the passengers, I may tell you that whether the person is a resident or a non-resident, as long as such passengers, in the ports, duty-free shops can accept foreign exchange by providing goods or services to such passenger, irrespective of their residential status. And the second category is where a person residing in Sri Lanka but providing goods and services to a non-resident. Let's say I earlier got the example of a hotel, and even let's say king coconut seller can sell their king coconut to a foreigner when they are travel to country. That in that case also can accept foreign currency because he is providing a goods or services to a non-resident according to this particular order. So in that form, as long as he's a resident providing services or providing goods to a non-resident, they can accept foreign currency. And if it is a duty-free shop holder, they also can accept foreign currency by providing goods or services to such passenger. And in both of these, if such foreign currencies are accepted, then the requirement is within a 7-day period, this foreign currency, they can either deposit. Let's say if the holder is, let's say hotelier is maintaining a business foreign, I told you business foreign currency account, it can be maintained by corporate as well as individual. So if he is earning foreign exchange, he can open a business foreign currency account, and whatever the foreign currency accepted by providing goods and services applied to a non-resident, let's say foreigner, you can deposit this to the business foreign currency account, and there's a permitted credit in that BFCA direction. So in the second, sorry. Okay, sorry. I thought someone is trying to speak. There's a question, and let's finish this slide and I'll move on to this that question. So whatever this foreign currency were accepted, they have to deposit or sell to you as the banker within the 7-day period. In that case, you have to verify that this particular service or good has been provided to a resident of Sri Lanka within a 7-day period. While ensuring that, you can get this deposited to their existing foreign currency account like BFCS, or else you have to require them to convert or buy sell to the bank. That is the requirements in terms of the order when it comes to acceptance of foreign exchange. And there's a question, I can take that question. Under import and export, healthcare assigned 49 mentioned that we can take out and bring to Sri Lanka up to US dollars. Only mentioning about currency notes, so is this includes debit and credit card as well? So yeah, first to ensure this which is asking under this import and export of Sri Lanka rupees, is it applicable for debit and credit cards as well? This is actually I'm not talking about foreign exchange here. When it comes to foreign exchange, yes, it's include EFTCs, foreign currencies, notes, drafts, and all. It's Sri Lanka rupees. This is the currency form. It's notes and coins, right? So in the hard currency form, this is up to USD 20,000. This is not applicable for debit or credit cards, which is issued against Sri Lanka rupee accounts. This is the hard form of currency we are talking about. That for that, this limit is there. And the second question is, can we use debit cards outside Sri Lanka to purchase goods for personal use? Any threshold for that? Actually, this is one other thing. There may be, I told you, like debit, credit card, or other value stored card are generally recognized as electronic fund transfer cards. For electronic fund transfer cards, we have mentioned that you as the bankers can facilitate your customers to use that EFTCs for their personal nature current transactions. Personal nature, it can be they can be going abroad and use this card for personal nature, like purchasing goods or services from abroad. He wants to stay in, your customer who is a traveler going abroad using this card and wants to stay in a hotel, let's say in overseas. Yeah, definitely this can be, their card can be used. For that, we don't, from our end, from the foreign exchange regulations perspective, we don't have any limits or threshold, because we recognize. I told you that I had talked about import-export control regulations, where the payment term regulations are there from the customs, Sri Lanka customs, or from the import and export control, from the inner revenue. There may be trade policy, other policies, other statutory requirements. But from the foreign exchange perspective, we don't have any threshold if someone is using the electronic fund transfer card for personal nature current transactions. But if someone is using this EFTC not for personal nature current transactions, let's say for capital transactions or for commercial nature transaction, then it's not permitted. But for as long as it's a personal nature current transactions, we don't have a threshold limit. You can facilitate such transactions upon establishing or verifying the genuineness of the transactions. But and in fact, under EFTCs, we have limited certain transactions or restricted certain, let's say someone is doing forex trading, someone is importing commercial imports, and those transactions actually are prohibited. That's what clearly mentioned in the so there's also another direction number 3 of 2021, like after this current transaction directions. You will be covering this one also greatly in the next Sunday session. So if I have to answer this question, there is no limit for personal nature current transactions. Either it can be issued against a rupee account or foreign currency account. No threshold from our end. But we have heard, like, from bankers, given the liquidity issues and all their internal business decisions, they may have they may have imposed certain thresholds. But our message is like, as long as it's a current nature personal nature current transactions, we don't have imposed any limits. So it's the user, you can facilitate that transactions without any limits, because after all, those are current nature personal transactions. Hope I have answers to which here. Next is, so far I have discussed about order 8, which is also get the notification issued on the February 3rd this year, and actually it's a revised order. And next is order under section 4 of the order under section. There are so many sections 4, 9, maybe different, because more largely these decisions have been issued under section 9, 1 regard to current, 9, 2 regard to capital, so and so. You definitely will cover extensively on these sections in the coming sessions, but for the moment I'm to say there is an order issued under section 4 of the Foreign Exchange Act, and this talk about is actually recent order, that means which we have issued in March this year. And this order permits hotels who are registered under the Sri Lanka Tourism Development Authority they're so far under the order 8. If a hotelier is providing goods or services to a non-resident, they can accept foreign currency. But then this order issued under section 4 permits hotels who are registered under Sri Lanka Tourism Development Authority to accept foreign currency from the residents, from the persons resident in Sri Lanka who have foreign currency in their possession. So this is a newly facilitation, if I'm to say. One of the reason maybe is to get the foreign currency from the persons who have been in hand into the system, as well as so this allows hotels to accept foreign currency from persons who have foreign currency in their possession, who are resident. So who are the persons who can residents who can have foreign currency in their possession? It should fall either of these 3 ways. I'm referring to the order 8. You can hold up to 15,000 if it represents either of these 3 ways. No? In that way, if that particular resident is holding foreign exchange, yes, they can use such foreign currency for making payments to the hotels for their services rendered by such hotels. And that is where it's mentioned here in this side, up to the limits and subject to the terms and conditions by the order under section 8 of the Act, and in respect of services rendered to such persons by the hotel. So underlying transaction should be hotel services, and who are the hotels they should have registered under the Sri Lanka Tourism Development Authority. They can accept foreign currency apart from non-resident from the residents, as well as long as such residents possess foreign currency either of these ways, that is from purchasing from unutilized portion of the travel allowance, or providing goods and services to a foreigner, or withdrawn from personal foreign currency or business foreign currency, that is up to USD 15,000. So in that, if the person or the resident in possessing that up to USD 15,000 in either of that way, he can use that foreign currency for making payments to hotels in terms of this order issued under section 4. And there are directions subsequently issued regarding this order. And you as the bankers can verify this when it comes to hotel is depositing because the order itself required hotels. So hotels who have accepted foreign currency from residents to deposit such foreign currency within a 7-day, like in the other case for from non-resident, or they sell to a banker. So this is the requirements then comes from the order issued under section 4 of the Foreign Exchange Act. Apart from non-resident, from the residents also, hotels can accept foreign currency for the services, hotel services they render, and deposit to a BFC or sell it to a foreign currency, sell to a bank. That is the order issued under section 4 of the Foreign Exchange Act. And this is some other I would like to talk. It's about hope so far you have no questions. And if I'm to move on, this some of the other, I told you like this direction number 2 is like extensive direction, but it's not an inclusive one, but it's not an all-inclusive one. It's so even though there are certain translations which we have specified in this direction, and one of the translation is you can say family living expenses. So by its nature, Family living expenses, this is also current transaction. Where we have mentioned that inward remittances by citizens of Sri Lanka working abroad. I have told you like work remittance, Sri Lankans who have gone abroad and working abroad under work visa sending funds to the country. Those are recognized as inward remittances, and that is freely permitted, even not subject to the rules and the Monetary Law Act. And then again, remittances of funds for maintenance of families or dependents living abroad, excluding for immigrants. Why the immigrant? I mentioned that who are the immigrants, and if it is not an immigrant, funds for maintenance of families or dependents living abroad are recognized as family living expenses. Let's say a foreigner working abroad, working here under resident visa, then he wanted to remit funds for his family living outside Sri Lanka, then you can facilitate this under treating it as a current transaction. And dependent means, again, parents, spouse, and children when it comes to current transactions. And then again, remittance of funds by immigrants on behalf of immigrants. Immigrants in the sense, I told you that there's something called migration allowance. So immigrants are allowed to claim migration allowance. And when it comes to living expenses, remittances by the immigrants, that is subject to the migration allowance also of the regulation applicable for migrant fund transfer. That is, it is subject to the migrant fund transfer regulations. But for in all other instances, remittances when it comes to living expenses are recognized as current transactions under the Foreign Exchange Act. And this is other thing, payments to expatriate. Expatriate is the ones who are foreign nationals working here, and irrespective of their nationality, these remittances are permitted. And this can include wages, salaries, allowances and other employment benefits, pension or provident funds, reimbursement of living and employment-related expenses, even sale proceeds of motor vehicles acquired by such expatriate while being employed in Sri Lanka. Those are some payments that can be facilitated as remittances to expatriate. Even they have gone abroad while ceasing their working in Sri Lanka. You can facilitate such remittances by the employers. So these are payments to expatriates, like for family living expenses, also form part of the current transactions. And we are reaching to the end of these slides now. So foreign currency accounts for current transactions, I told you like largely this, there are two categories. You may learn there are other categories like PFC, BFC, diplomatic foreign currency accounts, outward investment accounts, inward investment accounts. Likewise, there are certain types of categories of accounts introduced under the Foreign Exchange Act for different purposes, for different categories of eligible purpose. But out of that, two accounts I can mention here for your reference, which can largely utilize for current transactions, largely facilitate for current transactions. One is business foreign currency account. If you may have remember, under the Exchange Control Act, where we had several other accounts like foreign exchange earners account, inward remittance distribution account, foreign currency account for shipping and agencies, so on. So we had many foreign currency accounts. So under the Foreign Exchange Act, with the introduction of Foreign Exchange Act in 2017, we have amalgamated all these business nature foreign currency accounts into one category account called business foreign currency account. So this is largely facilitated business nature, cross-border transactions which are of current nature. And business foreign currency accounts can be opened by persons resident in Sri Lanka earning foreign exchange from non-residents. You can collect export proceeds, even deposit foreign exchange accepted by providing goods and services to non-residents. And for business foreign currency account holders, bankers have been granted general permission under the Foreign Exchange Act to facilitate accommodation schemes, loans, drafts and overdrafts and all in foreign currency for any purpose in Sri Lanka and for current transactions. And when it comes to personal foreign currency accounts, earlier actually under the Repatriation Control Act, it was non-resident foreign currency account, NRFC, resident foreign currency accounts, RFC. Likewise, we had several individual type foreign currency accounts, but with the implementation of the Foreign Exchange Act, actually we don't have NRFCs or RFC. Even some bankers still used to term these as RFC, NRFC, but they are not RFCs, NRFCs anymore. They are personal foreign currency accounts under the Foreign Exchange Act, and this is definitely can be opened by individuals. And there are under the eligible categories of persons, we have mentioned resident as well as non-resident who are traveling to Sri Lanka can open these personal foreign currency accounts, but it's not for corporates. Corporates and individuals who earn foreign exchange from a non-resident, they can open and they can go ahead with business foreign currency account. But as long as it's an individual, you have to facilitate them with personal foreign currency account. Don't open not open business foreign currency accounts. Individual actually, I mean, for corporates, you cannot open personal foreign currency accounts. It is only for individuals, and it can receive any inward remittances from outside Sri Lanka in favor of the account holder, only in favor in the account holder. Any inward remittances have been allowed for this particular account as a permitted credit. Again, loans for any purpose in Sri Lanka and for current transactions of the family members by the PFC holder working abroad is also permitted under these days, because the Sri Lankans who have gone abroad and work visas can open personal foreign currency account. They are non-resident and their family members living in Sri Lanka. They can you can grant loans for any purposes in Sri Lanka as well as such current transactions of the family members. Likewise, we have different categories, different directions issued under the Foreign Exchange Act regard to eligible persons, permitted credit, permitted debits, as well as for permitted categories of loans or the accommodations in foreign currency for these holders. And commonly, they can make payments related to imports and other current transactions, as well as for capital transactions up to a maximum of USD 20,000. And there's an order issued under again another section. I'm referring to section 22. And if you remember, if anyone can recall, this is an order issued under the section 22 of the Foreign Exchange Act, especially to control capital outflows, so the capital transactions with the pandemic. And because of this order is still in place, which will be till 1st of January next year. Still in this order is in place, and during the validity of the period, this particular order, capital transactions are permitted only up to a limit of USD 20,000. If this order is not there, then the capital transactions can be facilitated to these personal foreign currency account and business foreign currency accounts of the respective account holder. But as long as this order issued under section 22 of the Foreign Exchange Act is in place, these capital transactions are limited up to USD 20,000 during the particular period, validity period of the validity period of the order. But when it comes to current transactions, even with the order, there is no limit. Current transactions are not limited or not restricted, as I told you earlier. These are freely permitted transactions. One thing is you have to establish or verify the genuineness of the transactions to establish this as a current transaction. As long as such transactions are current in nature, you can facilitate through business foreign currency or personal foreign currency accounts of the resident. And current capital transactions, there are limits in place at the moment. And this is clear so far. No questions. And so this, I would like to end the session with this slide. What if the AD authorized dealer, like the licensed bank you all are representing? So what if you all refuse a current transaction remittance? Your bank should communicate your decision in writing together with the reasons if requested by the person requiring the foreign exchange, subject to the provisions of the section 9 of the section 9. And with your reasons, you have to report to the central bank why these transactions have been declined. So decision should be in writing and with the reasons, because as they are broadly current in nature, current transactions. And any person who agreed by this decision may refer such request within 14 days to central bank. So our communication or our message is to you all is identify the nature of the transaction, like in my earlier slide. this categorization or the demarcation of transaction as to current or capital is important, because for current transactions, as I told throughout this session, freely permitted, there may be trade policy of the government, other statutory requirement, and the rules that, like for exports, we do have a rule in place under the Monetary Law Act, given the circumstances. Likewise, subject to that all Foreign Exchange Act and the regulations or the directions issued thereunder facilitate current transactions bankers to release foreign exchange freely for such current transactions. But for capital transaction, yes, we do have controls, we do have limits in place. But for current transactions, we don't have any limits. It's something to be done by with the establishing genuineness of the transactions by the banker. So identification of the current transactions clearly, and then apply the directions or the relevant regulations is important in this case. I hope I gave some idea to you all regard to how these foreign exchange regulations and how the current transactions, how you all can facilitate current transactions, or what are these current transactions, and how it differs to capital transactions, and when it comes to where we have regulations and all, and some of the recent rules, orders should, especially during the pandemic era, which I think I have elaborated to you all. So before we finish for the day, I'd like to answer if you have any questions. Silence mean all are clear with current transactions and related directions, isn't it? So you'll be having a exam at the end of this certificate course. So I hope you got a somewhat understanding on these directions, and like to thank you very much for listening to this session, and I'm glad to wish you all the very best for your exams. And if you have any questions at any time, you can sure drop us an email to dfe at cbsl.lk, and even we do have, I have shown you earlier, we have our dedicated website. You can inquire, or you can call us, you can email us at any time, so this is our email address, and the email address, a website. You can contact us at any time, and that's it. And then anything not there, thank you very much.